to talk about. Also the advance decline ratio, before we start taking your stock related queries as well. You've seen the advance decline ratio continuing to be in focus as well. Let's pull that up before we get into a conversation as well. That also is the other factor. And probably if we can pull up the advance decline ratio before we go on to the Leap management to talk to them about their IPO as well, as I was saying, because the advance decline ratio has seen mixed trends. You've seen more...
And joining me is the management of the company, Sunu Matthew, founder and MD of Leap India.
Thank you, Dima.
And Rajesha Malle, who's the CFO of the company. Thank you for joining us on NDTV Profit.
Thank you.
I want to start by asking you that the business is asset heavy and most of the IPO proceeds are going towards debt repayment. What does the current debt look like, and after the repayment, what are the interest costs you're looking at? And also, what will be your expansion plans and how are you going to fund it?
Okay. So many questions into one question. So we are raising round about 480 crores for the company. So already we have a very strong EBITDA. We have done 379 crores of EBITDA this time. So we will use around about 360 crores to actually repay the debt, which will bring our debt to equity ratio in a very comfortable situation. And on the basis of that, we have a huge credit line. So we will be good to go for next couple of years. As far as the expansion plan is concerned, we are getting into GCC, Gulf countries, and we have already told the plans about it. Most probably from this month or by 15th of next month, we will be starting our revenue generation from GCC. So these are our initial plans, and rest when the Q1 numbers will come.
So pallet pooling contributes about nearly 50% of your operating revenue. Now, how will you diversify this and grow the other segments like containers, MHE and forklift rentals?
See, currently we get around about 62% from pallet pooling, around about 14% from MHE, and rest everything comes to containers. So this container business, when we talk about containers, it is crates and foldable large containers. That business is growing tremendously, and it is predominantly used in automotive sector. So we are not looking at stopping any sector. We are there into 38 sectors. We want every sector to grow. So currently we are into a very nascent stage of pallet pooling in the country. So whichever leads first, it is absolutely okay for us.
So 2,000 crore of your IPO proceeds are, an offer for sale out of the 2,480 crore IPO. Now with the KKR selling, the KKR backed Vertical Holdings selling its stakes. Now, how does one look at this as an investor, and what will it change for Leap India's long-term growth plans?
So first of all, you should look at it that KKR has put in more than 2,500 crores into the company, and they are taking somewhere around about 2,000 odd crores. So looking at this, now we have taken them as the promoters. So they are also bound now to not to sell for next 3 years. I also cannot sell for 3 years. They also cannot sell for 3 years. The most important part that you have to look into this is that I am buying the shares. I have put in my personal money. I have bought the shares at the same valuation that I have given it to the shareholders. So they are here for long term. It's a very long fund. So they will be sitting with me for next 5 to 7 years. So there will not be any pressure in the market of they coming on to sell the shares in the near future.
All right.
Right, now shifting focus back to the query session. Let's welcome in our fundamental and technical guest on the show. We are joined by Somil Mehta, the head alternate research of Mirai Asset, Sher Khan, and Samir Dalal of Natwarlal and Sons stockbroker. So firstly, to start off with, the first query is coming in on Tamil Nadu Mercantile Bank. Sitesh Roy has been holding this counter since the Q1 numbers and wants to know whether should he continue to hold the stock or exit. Any stop loss if you could suggest on this. Somil, any view on Tamil Nadu Mercantile Bank?
My view would be positive on this bank. Overall, the trend is up in the very short term, you can definitely book some profits because we've seen very good rally on this bank. However, if you have a medium term to long term view and if you're holding on to it, keep a very strict stop loss around 790. So my view is positive in the medium to long term.
Got it. Well, the next question is from Satyan. He's asking about GMR Airport, something he's been holding on since the last 4 months at 95. Stocks back to that level of 100 where it started that rally from. He's asking if he should still continue to hold this particular position. But Samir, welcome to the show. Very good morning to you. Firstly, both of you guys looking very dashing in kurtas. But Samir, how are you looking at GMR Airports now?
Good morning, Puneet, and thank you for inviting me. And you all are looking dashing as well.
Thanks so much, Samir.
And so GMR Airports is a unique, interesting play in the sense that, the airport space, there are going to be pretty much two listed players eventually. One is, I think, at the moment GMR, and the other one will be Adani whenever it comes up for listing. Look, the expansion that can happen and the growth that can happen from the increase in the airports and the usage is great. But this is a very capital intensive business. Returns come much later. ROEs are questionable. So from that perspective, it's difficult to take a long-term call right away on whether this is a long-term investment or not to be made. For me, at this point of time, it's an avoid. You're making some money of it. You bought it at 95. I say take the money. There are a lot of other companies which are capital light in nature, high ROE businesses. Invest in that. This is going to be something that is going to be painful for a longer term period.
Okay, the next query is coming in from Rajesh from Bangalore. It's on HFCL. He's been holding on to this counter. He's having nearly 300 shares, bought at a price of 96. He wants to know whether should he continue to hold the stock for the next 2 years. The stock has run up significantly from his buying price. Any view on this, Samir?
Yeah, we do know about this company. Look, the stock's done extremely well for you. It's more than doubled. Look, they're making wires. They have some defense products and electronic products and all. But the real story of growth has been the fact that, the data center expansion is going to lead to a great growth in the wire segment, the fiber optic cables and the wires that they make for the data centers. Now, this is something that everyone's just latching on to, and I don't think it's going to play out the way everyone expects it to play out. So for me, both HFCL is a sell and so is Sterlite Tech at this point of time. I'm not denying the fact in the near term, everything looks hunky-dory and they may continue to go up, but the growth will be unsustainable over a longer term period. And at that point, what will happen is you will end up holding this stock at higher prices and not get any return. So avoid it. And if you have, for you should actually book your profits.
Got it. Well, let's go across to Gurugram now. Nishant is dialing in for a stock related query. Nishant, very good morning to you. What's your query?
Hi everyone, happy Friday. I bought Astra Micro at 1085, around 55 shares. So I want to understand if I should buy more, hold or sell it. So,
You buy this in the recent correction, Nishant?
Yes. During March-April time.
Well, I think it's turned out to be a very good bet for you. Many congratulations. Any view here, Samir, that you can offer Nishant? He bought a growth stock at a good price. Should he continue to ride that wave?
So, the defense space is going to continue to do well. The problem only lies in the fact that valuations are absurd, right? Trailing earnings, if I'm not mistaken, above 65, 70. Forward earnings, I think, are also around 50 odd. So, from the fact that valuations are rich, upside is going to be limited. But given the kind of spend we are expecting to continue to happen in defense over the next few years, I guess you could hold on for another year or so. I think these premium valuations can sustain for another year or so. But at some point in the future, they will. So keep a close watch on it. If it goes up closer to 2200, I'd say book profit. But don't add it.
Right. The next query is coming in from Vedant Garg. He wants to know the buy targets for Gopal Snacks, and is the current level a good time to buy, and any targets if you could give on this, Somil? Samir, your view.
Gopal Snacks has been in the downtrend, so my view is definitely negative at this point of time in the medium term, in the long term. However, in the very short term, you can keep a stop loss around 268. There is a small spike I'm expecting towards 300 levels, so 300 would be my target, but not in the medium term, not in the long term.
Got it, Saumil. The next one's on HEG. Akhil from Pune holding shares at 542 odd. Samir, he wants to know if he should continue to hold this for the next 3 to 4 years, or is it too expensive of a story even to consider and add more right now, is his question.
So honestly, I would say hold on to it. In fact, on corrections, add on. I'll tell you very simply why, right? They are making graphite electrodes which go into making steel from the electric arc furnace route, which is using scrap steel to make fresh steel, right? New steel. Not new steel, but steel. Now, this part of the business is going to keep growing for electric arc furnace investments because there is going to be more and more scrap steel available for recycling. Second, they're also going to be making graphites, which are going to go into electric batteries, the plant for which is under set up. And once that gets going, what you will see is the top line and profitability. The initial phase, of course, the profits will not grow, it will just be top line growth because the cost will come immediately, but the profits will take a while to come. But as all of that materializes and finishes, what you will see is the profitability growth. Third, this is there are very few players in the graphite space. I think globally 6 players, 2 are in India. One is Graphite India, the other is HEG. HEG's got a very nice large capacity and they have a large investment in one of the companies in the international markets. So they kind of have a good grasp and good say on what the graphite pricing eventually should be. The only risk for them is the needle coke that they purchase, but I think that will be a pass on for them. So for me, it's a hold on and corrections buy.
Okay. The next query is coming in from Vijay from Chennai. He wants to know the short-term targets for Maruti Suzuki. Saumil, any view on Maruti?
See, I'll be positive on autos overall. M&M, Maruti, Bajaj Auto, all of these stocks are looking good. Two-wheelers are consolidating a little bit. However, two-wheelers are doing good. Four-wheelers are consolidating a little bit. So Maruti, Suzuki probably would consolidate around this area, around 13,500, 13,800 levels. But I'll be expecting the stocks to break the consolidation on the upside. Specifically for Maruti, the breakout levels is above 14,500, and once it breaks out and confirms the medium term trend, the next level on the upside would be 15,500 and above.
Got it. Also, Saumil, a quick view on Aarti Industries as well. Sanjay from Bengaluru bought the shares at 493, asking if we should continue to hold on, sell out, or average down. What would you recommend?
Hold on to it. No need to add on to it. There is a triangle breakout which happened a couple of trading sessions back, and it has been retested today. So I'll be expecting this stock to continue moving up. Keep a stop loss around 480 in the very short term. If you're holding it for short term, keep a stop loss around 480, and the 200 daily moving average will be a base for the stock now, which is 450. So these are two support levels. I'll be positive in the short term, medium term, long term, all 3 time frames.
The next query is on Newgen Software. Govind from Hyderabad is holding around 1,000 shares bought at a price of 900 rupees. He wants to know, should he add more or book losses? Any view on this, Samir?
Sorry, no coverage on this one.
On charts, any view, Saumil?
See, my view is negative on this stock. The breakout levels are above 620. If it closes above 620, only then we'll probably will be able to revisit and think a little positive. But at this point of time, the trend is negative, and I'll be expecting the stock to go down till at least 490 or probably 470 as well.
Got it. Well, the next query now coming in, and this one's from Andhra Pradesh. Pradeep dialing in for a stock related query. Pradeep, very good morning to you. What's your query?
Yeah, very good morning. My query is regarding ICICI Bank.
Okay.
I want to know the entry price of entry time for ICICI Bank for a short term period of time.
For a short term. Okay. Saumil, coming back to you, what's your view on iBank?
ICICI Bank definitely looks good. It's my positive side. On the private sector, ICICI Bank looks the most promising. But at this point of time, the private sector banks are not doing good. The large cap ones, the small caps are still doing good. ICICI Bank, I would suggest buy on declines, not at this point of time. The buying rate probably would be around 1350, 1360 levels, which is the 200 daily exponential moving average. And then revisit. Once you get a reversal signs in the stock, then you can enter there.
Got it. Well, let's now start the rapid fire round in this edition of the show. Samir as well as Saumil, you know the drill. First question is from Padma from Bengaluru. Saumil, she actually sold BEL unfortunately at 384. I don't know but she wants to enter at that 360 level. So I don't know if she made money or no, but I think it rebounded from that 380 level actually. So is there a chance to go back down, or is this a good time to re-enter, Saumil?
Yeah, I think BEL, if you're holding it for long term, if you're trying to get into it for long term, great stock to be in.
Right.
I'll be absolutely positive on this one.
The next query is on STL Networks. Saumil, any view for short term?
Short term, definitely positive. Keep a very strict stop loss around 2480. My targets on the upside would be 31, 32 levels.
Sudhakar from Hyderabad wants to know if it's Lotus Developers is a good time to buy right now. Samir, any coverage, if not, on the space?
Nothing on Lotus Developers, but real estate remain positive.
Next query is on LG Electronics. Manideep from Andhra Pradesh has a few shares bought at a price. Okay, he has bought it at different levels. Should he continue to hold this counter for long term? Samir, any view?
Oh, it's a tough one to answer, but I mean, for me, valuation's not comfortable, but growth is there. So the question is which way will it swing? But I would not be one to invest. I would actually sell.
Rajesh from Hyderabad actually wants to buy either Naveen Fluorine or BSC. Either of those counters, Samir, I know different industries, but for the long term, anything that you like?
Both very expensive, BSC and Navi Fluorine. I would avoid both. There are lots of other counters you can invest in at this point.
Next query is for you, Samir. It's on CG Power. Arvind from Chennai has few shares bought at an average price of anywhere between 780 to 1500 rupees. Can he hold this counter for the next couple of years?
Yes, absolutely. Hold on to it. The expansions that they're doing in the semicon space, the power, the transmission distribution space, all of that is going to do extremely well. This is definitely a hold.
Ms. Sita from Telangana is holding on to Tata Motors PV, but at 589. Samir, how did you view the results, and is it a good time to buy now?
Results were a bit disappointing, but that's okay because we expect it to bounce back. But it's a buy for me. I would add on.
The next query is on Max Financial Service for you, Saumil. The viewer wants to know whether is it a good time to buy this counter.
See, I'll wait for a breakout. The breakout is above 1670. So I'll wait for a breakout. My view is positive, but I'll wait for a breakout.
Also, Saumil, on Juniper Hotels, if you have a view, Harsha from Vijayawada bought these shares at 265. I know not too much historical evidence for this counter, but any view here?
Juniper Hotels. My view is negative on this one. It's been trending down, so my view is negative.
The next query is on Texmaco Rail. It's for you, Samir. Sampath Balaji from Chennai is a long-term investor. Has around 300 shares. Bought a price of 250. Should he hold or sell?
Hold on to it. If you want to add something, add Titagarh Rail.
Vari Renewables, our viewer Radha Krishnan is at 1150 rupees per share is what he's bought at Saumil, and wants to know if he should book out or continue to hold.
Was it Vari Energy or Vari?
No, Vari Renewables. Yeah, stocks at 890 odd. He's bought at 1150.
Vari Renewables. See, just give me a second. Okay, so now in the very short term, it's in the downtrend. However, in the medium term outlook, I still believe that it's a good stock to hold on to. My targets on the upside would be at least above 1100, probably above that as well. But you'll have to hold on to it for a little while now.
Okay, the next query is on Cupid, and it's for you, Saumil. Arvind from Chennai is holding few shares of Cupid. Can he hold the counter for the next 1 year?
The Cupid is in an uptrend, and I definitely like the stock. It's been in the uptrend for a very long time. Do not add fresh, but you can hold on to it. Keep a very strict stop loss around 240.
Correct. Well, that was the last question of the rapid fire. Do stay tuned. A lot more stock related queries on the other side after this very short break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनॉन टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 AM. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy, sell, hold.
Welcome back. You're watching Ask Profit right here on NDTV Profit. If you haven't already done so, do start sending your queries right now, either on WhatsApp or you can call us on the landline number that is flashing on the top of your screen as well. Let's continue with your stock related queries now. This one's from Sumant, who's from Hyderabad, holding on to Metropolis Healthcare, bought at 590 rupees per share. Samir, he wants to know if he should still hold. I mean, within the diagnostic space as well, the results are good, but is it priced in? What's your view?
So I believe the growth for this industry is still very strong, right? We in India are still predominantly, if there is a problem, go for a blood test, or if there is a problem, go for some scans, right? That trend has to, over a period of time, change. And that trend will become preemptive testing. When that starts happening more and more, we believe that this industry, which has great operating leverage again, will start doing well. Now this could take a little longer. So if you're a long-term investor, stay invested. I think the opportunity is still extremely good. If you are looking from a 1 year kind of view, if you get your price, maybe exit. But if you have 3 years, stay invested. I think there's a lot of money to be made.
The next is a caller query coming in from Hyderabad. Sai, you can go ahead and ask your query.
Yeah, good morning. And
good morning, sir.
I'm holding some shares of LIC since 6 months, I guess. And
Okay.
I've got some in OFS. Basically, I'm a long-term investor. So what sort of targets can I expect? And where do I need to book my profits? Because I can't resist if I get 10, 12, 15% of profits. Yeah.
Okay. Samir, any view on LIC and he's currently sitting on a profit. Should he book that or should he continue to hold? What would be your view?
I say hold on, right? So, everyone keeps talking about the fact that the embedded value is so high for LIC, which will eventually come out. And I believe that is very true. The problem is that the selling has not finished. So government has sold, but who has bought those shares, right? So a lot of your PSU banks and certain institutions which were part of the government were mandated to buy into the OFS of LIC, which is why the subscription was so strong. Now, some of these banks do not need to hold on to the stock for long. They will offload it. And that is what is stopping the stock from rising in the short term. If you're a long-term investor, I believe eventually somehow they will get this incorporated and pushed into the Nifty. And when that happens, automatic buying will come through. And as that happens, the stock will move up. So stay invested. Long-term value is good. I think in the very short term, you might see it stagnate. Medium term is also good. So for me, this is a buy on even at current levels and even on dips.
Got it. Got that view, Samir. The next question, and this one's on TBO Tech, a fairly recent listing. We've seen in the last couple of years a good listing come through for TBO Tech. Our viewer wants to know if it's a good time to buy this for the long term, and this is Mr. Rao. Samir, I don't know if you've studied this counter, but how do you look at TBO Tech now?
Cover TBO Tech, I'm sorry.
Okay, let me go to the next question then, and this one's on Grow. A viewer holding shares at about 185. He wants a really long term, next 5 to 10 years is what he's mentioned, Samir. How are you looking at this? This is Pawan Kumar asking the question, and the question coming in from that we know about the growth prospects of the company, but how are you looking at it in context with the space as well? We've seen BSE also come off a little bit. We'll have the NSE IPO this year. How are you looking at these companies now?
Okay, so BSE and the exchanges are very different from Grow, right? Of course, they cater to the same thing, that is investments in the market. But Grow is more to do with low cost broking, which is appealing to the mass market and things like that. And then they are, of course, now getting into the MTF book and they're trying to do some amount of wealth and all of that. So from that aspect, that part of the business, if that can scale up, that is better because that is more consistent revenue. The transactional business, which is there, is if for whatever reason the market volatility goes down, I've discussed this multiple times, if the markets fall and interest in the markets by itself reduces, then Grow's business takes a massive hit. So alternatively, we remain very positive on the wealth management side. And there are few companies that are doing that and doing that very well. One is, of course, Motilal Oswal. They have the wealth angle, they have the mutual fund business, they have the credit business, they have the MTF, and they have the investment banking. So they cater to a very vast spread of products in the wealth division, which is something we think is very good. So that is the one we would prefer. The others, if you want to look at from wealth, and Nuvama and IIFL, where it's more steady stream revenue rather than transactional revenue, which is Grow. But Grow will in 10 years time will obviously scale up its operations, so it'll do well. But from here, what your returns will be, maybe mid teens at best. But I think the other businesses could probably give you accelerated returns of 18 to 20% compounded.
Okay. Well, on this side, let's welcome our new technical guest, Devin Mehta, manager, a technical and derivative analyst with IDBI Capital Market. So the first query coming in from Naga from Hyderabad. He wants to know the good entry level for PFC. Also any targets that you could give, Devin?
Good morning, firstly, and PFC, we have seen that pressure from the higher levels. So overall structure is weak, but if someone wants to invest or trade in PFC for short to medium term, I think a long position should be avoided in this counter. In fact, any bounce back towards 400 can be a good shorting opportunity for trading purpose. On the lower side, the support is placed at 365. So that can be the levels we can watch out for. And on the higher side, the selling is recommended and not buying at current levels. And the stop loss can be 410. So the structure is weak and short trade is recommended on PFC.
Got it. The next question coming through, and this one's from Balasubramaniam, who's the regular viewer of the show, wants to know about Uno Minda, Samir. He's holding shares at 1267 odd, asking if he should add more at the current price. Would you recommend that?
So the price is not much different from what he bought it, right?
Yeah.
The auto anks business is something that will continue to do well. From that perspective, we believe Uno Minda and the products that they have will continue to grow. But wait a little before you buy. If the stock comes closer to 1100, it might be more of a buying opportunity. At this point, just stay with what you have.
Okay. The next query is coming in on MRF. Right. Ram from Hyderabad is holding 3 shares at a price of 1,34,000. He wants to know the long-term target on this. Samir, do you track MRF?
Yeah, difficult to give a target on MRF because the valuations are already rich. But we believe that the entire tire space in India, we just discussed another auto inks company, but the entire tire space in India, which is also catering to the auto industry, is going to do extremely well. This is one of the easiest ways, we've always said this, to play the auto industry without caring whether electric vehicles, CNG vehicles, petrol, diesel, whatever kind of vehicles comes into, because it doesn't matter, you need tires, right? And not only that, as the volumes keep increasing in India, the replacement demand keeps increasing. And that is where the real money is made. The OEMs, when they sell they make a limited amount of profitability. But when they sell in the aftermarket, the margins are much higher. And as that part of the business keeps scaling up, I think the profitability will keep increasing. So hold on to your MRF. In fact, corrections closer to maybe 110, 120, you can even buy more. We think over the next 2 to 3 years, you can comfortably get a compounded return of over 15 to 18%.
Got that view, Samir. But the next question is from Vikas, who's from Bengaluru, wants to know about MV Photovoltaic, holding shares at 350 odd, Devin, asking what he should do with his 350 shares. So he's currently, actually he holds 3,000 shares, pardon me, at 350 rupees per share, Devin. He's currently sitting on a loss. What should be his strategy?
But I think overall the structure is positive. We have seen a good up move in this particular counter recently, and after that we have seen a consolidation. So on the lower side, 305 is the strong support for this counter. So I think one should hold this counter with a stop loss of 305. On the higher side, 333 is an important level. Once this stock crosses 333, we can see some further up move towards 365. So one can hold this counter with a stop loss of 305.
Okay. The next query is on. Okay, the next query is on.
Max Financial.
No, it's on Bank of Baroda. Deepak from Kerala is holding 550 shares of Bank of Baroda at a price. Okay, 550 shares bought at a price of 250. Any short-term target on this, Devin?
Okay, so it is currently trading near the buying price itself. So one can hold this counter. PSU Bank recently have done well, but Bank of Baroda was the underperformer in this sector. But as far as chart structure is concerned, I think 243 can be the stop loss as the view is short term. And once it crosses 250 levels and closes above this, we can see some move towards 256. That will be the first target, and after that 262 can be the next target. So overall short term view is kind of weak, but again it is trying to sustain above 250 levels. So if it closes above this, we can see some further up move. So 243 will be the stop loss, and one can hold this counter.
Correct. The next counter is on Inox India. Our viewer Arun Selvam is holding shares at 1320. So he's sitting on some good gains right now. Wants to know the next couple of years view, if he should still continue to hold on. Sameer, would you recommend that?
So we don't have coverage, John.
Anything on the charts, Devin, that suggest any view on the up move? I know it's a very long-term 2-year view, won't be possible, but on the charts, what do you see?
No, I think if I consider the weekly and monthly chart, the overall structure is positive for this particular counter. One should definitely hold this. The stop loss can be 1750. 1750 is a good level where one can place a stop loss, because the consolidation has been made in this particular range. On the higher side, there is a resistance around 2100. So once stock crosses this level, we can see a good up move and breakout in this counter, and stock can move towards 2400 levels as well in the coming months. So I think overall structure is positive. One should hold with a stop loss.
The next query is from Damodar Pittu from Bangalore. He has bought 130 shares of Apollo Microsystems at a price of 385. He wants to know whether should he continue to hold this counter or exit. Sameer, any view on Apollo Microsystems?
The valuations are rich, right? Extremely high. Look, we believe the growth is there. The defense space, which we discussed earlier also, the opportunity still exists. The products that they have are good. We think this is at best at this point a hold because of the valuation. Returns will be muted over the next year and a half, but over a longer term period, any corrections closer to maybe 320, 330 pose a strong buy. So hold at best for the current.
Got it. The next question coming in is on Bank of India. Murli, who's from Hyderabad, holding shares at 91 rupees per share. He wants to know about, if he should still continue to hold on for the next couple of years. How do you see the PSB bank space, Sameer, and is Bank of India in one of those picks?
The Bank of India is also something you can hold on to, but do you want to be a little more aggressive in the banking sector, or do you want to just be a passive investor is the question, right? So for me, because Bank of India is just like something that is going through the motions, I don't see aggressiveness. I don't see them taking calls, which is going to allow them to do something exceptional. For me, it's something that's avoidable. If I had to take a pick, the best in the banking and PSU banking at the moment is, of course, SBI and followed by Canara Bank. But SBI, the valuations are a lot higher compared to the rest of the PSU banking, right? So Canara Bank and Bob, which was discussed earlier, are the top two picks. But not that you're going to lose money in Bank of India, but I think you'll make more money in the other counters.
Okay, the next query is on EPAC Durables. The viewer is holding around 1600 shares, bought at a price of 390. Should he hold or sell? Any view on this, Devin?
No, I think sell. Try to exit on bounce. If any small bounce occurs towards 230 odd levels, one should try to exit. Overall structure is weak. We can see some further corrective move towards 197 in this counter. So try to exit on bounce.
All right, let's go across to Satish now, who's dialing in for a stock-related query. Satish, very good afternoon, very good morning to you actually. Welcome to the show. What's your query?
Sir, Manipal Health I purchased through IPO. I got it 25 shares. I can hold it or?
Got it. And you are in good gain, so congratulations for that. But how are you looking at this space, Sameer, now? If not a direct view on Manipal Health, what would be your recommendation on the hospital space? We've seen multiple news flows come through, parliamentary panel commissions, recommendations. How are you looking at the space now?
So, across the board, Puneet, valuations are really expensive, right? Manipal is no different. Now, the question is, which one of the hospitals do you really want to own, and which one has the growth? So for me, when Apollo was trading closer to the 7,000 levels, we thought that was a good opportunity to enter for the simple reason that, they're going to go through a demerger where you're going to get the testing arm separate. You're going to get the the pharmacy arm separate and then the hospital separate, and then you could hold on to the hospital, which would have a slightly lower valuation compared to the rest, like Fortis or even Manipal or all of that. So, look, the opportunity for growth in the hospital space because of the kind of just simply put, the kind of population that we have that needs catering to is huge. Plus, you have tourists coming in because our healthcare is a lot cheaper than international markets. So, that is something that will grow. It's just that can these higher valuations sustain for the next 3 to 5 years? That's the question that we've got to answer. And at this point of time, I am a little skeptical that these high valuations can sustain. So I would book profits. If these stocks fall, whenever they fall over the next year and a half, that might be an entry point. As for the regulations which you discussed, Puneet, look, the room rate capping is just one aspect of the thing. The bigger charges in the room today, when you go to the fanciest of hospitals in Bombay, and I can just tell you about that, your room cost as a percentage of overall cost of the treatment will probably be 5 or 6%. So capping that, you're like, it's not changing the dynamics of the hospital business. Yes, some amount of profit will go down, but they'll make that up through some other, the OT charges or, the share that they get from what the doctor's fees are. All of that could change. So I don't see that as a negative, but valuations, yes, I do see as a negative. And that is only corrections I would probably look at buying. I wouldn't buy them at this point.
Got it. Let's go across to Vijayawada now. Bindu, who's a regular viewer of the show, now joining in for a stock-related query. Bindu, very good afternoon. What's your query?
Good morning. So I'm holding Vishal Mega Mart, 500 shares at 110. So I want to know about the 6 months view of the stock, and I want to even add more. At what price I can enter for adding more?
Enter for adding more. Okay, so you want a view on the charts then, 6 months shorter time frame. So can we get you a view on the charts, Bindu?
Yeah.
Okay. Deven, how do you look at Vishal Mega Mart? Stock has seen some correction, but what's your view on the charts now?
No, I think the overall structure is weak. I think one should wait to add more at current levels. Also, in fact, we can see some further correction towards 98 odd levels. So overall structure is weak. One should try to avoid adding more on dips. But in fact, if it negates the current structure, which is of lower top, lower bottom formation, and if it breaches above 112, then I think that will be a good time and opportunity to add more. It will be on the higher side, definitely, but at that time we'll see some kind of a end of corrective move and start of new fresh up move possibly. So 112 is the resistance. If it closes above this particular level, we can see some further up move towards 120 levels as well. So adding on dips is not a good idea for this particular counter. I think we can see some further corrective move towards 98. Try to avoid adding more at these levels.
Well, the next question coming through, and this one's on TVS Motor. A viewer wants to actually know if it's a good time to buy now, and this is Suresh asking the question. Sameer, actually, we've seen a massive run-up from that 3,000 mark, which it corrected to, and then a very big run-up. The valuations, of course, are most expensive for this counter. So should she wait for some correction before entering?
Yeah, absolutely. Wait for a correction before entering. All of them are expensive. Bajaj, the cheapest of the lot would still be Hero. And if you want to take an outlier in the space, it's take a very small position at this point of time is my suggestion. But Ola Electric, I think a turnaround when it comes there, that stock could actually rally quite a bit because Ather has already run up quite a bit. Bajaj is quite expensive. Aisha is quite expensive. TVS is quite expensive. So Ola and Hero, but Hero's also run up recently. So a small correction before you buy that.
Sameer, it took just 15 minutes for you to send across the first bouncer for the show as well, because Ola Electric, I think, is the first time you've spoken about it on the show, but got your view, and I think we'll probably take this up with you again in a more detailed discussion, because right now it's the time for the rapid fire round. You both know the drill. The first question is on Marksons. Kishore from Hyderabad bought these shares at 270 odd. What should he do with this counter now, Devin?
So overall structure is good. I think one should try to hold. Overall pharma stocks are looking good. hold with a stop loss of 280. We can see target towards 340.
The next query is for you, Samir. It's on Cochin Shipyard. Ravi from Mumbai is holding the stock at a price level of 1100 rupees. Should he continue to hold or exit?
So he's got it at a good price. Hold on to it. If it comes back to that 1100, buy more.
Deven, the next one's on Manappuram Finance. Our viewer bought shares at 355 and asking a stop loss and a target.
So I think one should hold with a stop loss of 322 levels. We can see up move towards 365.
Next query is on L&T. It's for you, Samir. Siddhi Amre from Mumbai is holding 270 shares, bought at a price of 4,047. Should she hold or sell from long-term perspective?
Hold at this point.
Hindustan Zinc as well. Deven, our viewer bought shares, I think at 595 and wants a 6-month view on the stock.
So I think we have seen slight corrective move in this particular counter. Stop loss can be around 555. If it closes below that, one should try to exit. And on the higher side, 600 is a resistance. If it crosses above that, we can see some further move. But 600 will be the target.
The next query is for you, Deven. It's on Wipro. Siva from Amravati is holding 5,000 shares, bought at a price of 201, currently sitting on a loss. Should she continue to hold this counter for the next 3 months?
I think exit on bounce around 190.
Next one, Gillette India. Our viewer George wants to know if he can add this for the next couple of years. Samir, would you recommend that?
No, not at this point.
The next query is for you, Deven. It's on Sun Pharma. Asta Sabarwal is holding few shares at a price of 1,830. Should she sell or hold?
I think one should try to book profits.
Next one's Office stocks trading at 269 is what, and Manoharan actually bought it at 269. Stocks very closely there. But Samir, any view here if you track this counter by any chance?
So, if the stock has corrected quite a bit, and because of which the valuations are looking decent. So I would actually add at this point.
Next query is for you, Deven. It's on Bandhan Bank. Aditya Gaur wants to know whether should he buy or avoid Bandhan Bank at current levels.
I think avoid this counter.
The next one's Olectra Greentech. Deven, our viewer wants a short-term view. I think the results were a little weaker and hence stocks down today. But any view on the stock?
I think structure is good, holding about 200-day exponential moving average. 1290 will be the stop loss, one can hold. And on the higher side, 1400 is the resistance.
The next query is for you, Samir. It's on Irida. Sriram from Hyderabad is holding 100 shares at an average price of 180. Should he average more or sell?
Sell.
On time, Technoplast. Edwin has bought these shares at 197. Deven, asking a target.
I think try to avoid. In fact, try to exit on bounce.
Next query is for you, Samir. It's on Tilaknagar Industries. S. Sriram from Visakhapatnam has bought few shares at a price of 335. He's a long-term investor. Should he hold or sell?
I don't have
Any view here, Deven, on Tilaknagar?
I think overall the structure is positive. 550 can be the stop loss.
Correct. Next one's Keynes Tech. And Samir, I don't know how you viewed the quarter 1 results. Our viewers watched the 3122, suppose the correction. Any view now?
The results were mixed actually. It wasn't that great, right?
Yeah.
The problem is that this is a sector you can't totally avoid. So at best, I would say hold at this point. I wouldn't give any more recommendation for buy because I'm not totally convinced that the turnaround is there.
Right. The next query is on GE Shipping. It's for you, Deven. Bharat from Andhra Pradesh is holding 260 shares, bought at a price of 1,560. Should he continue to hold or book losses?
Book losses. The stock has breached 200-day exponential moving average. Try to exit.
Raj Shekhar is holding on to Vari Energies. He bought these shares at 2149, so got in fairly early here. Samir, any view? Should he book out his profits now or wait on?
No, please. I'm buying this stock. I'm very positive on Vari. Trading at 17 times trailing earnings. We think the opportunity is very strong. We have a target price of 2,501.
The next query is for you, Samir. It's on Vedanta Limited. Uma from Bangalore is holding 158 shares at a price of 286. Should she continue to hold this?
Sell.
On Azad Engineering as well, Samir, Sriram Raghuram holding shares at 1707. Any view on this counter? Has been a very strong performer.
Valuations are absurd. Book profits.
Okay.
The next query is for you. Deven. It's on Netweb Tech. He's holding, Murli from Hyderabad is holding few shares. Should he continue to hold or exit?
So I think the structure is positive. One should hold with a stop loss of 4785.
Got it. Well, that was the last question of the rapid fire as well as this edition of the show. Samir as well as Deven, thank you so much for helping us solve all these queries over the last half an hour as well as an hour. Appreciate your time and inputs. But viewers, out of time on this edition of the show. Thanks so much for watching and helping us and actually giving us your 68 queries as well. Stay tuned, a lot more action on the other side.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी की टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तुम भी कैसे? टाइगर कैसे?
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
First move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
Hello and welcome to KYC. You're watching NDTV Profit with me, Sharad Dubey. This is the show where we get you interesting companies based on their earnings and also a lot of other stories as well. But it is the flavor of Independence Day, and of course, happy Independence Day to all the viewers of KYC and NDTV Profit. But before that, I've got a Desi company for you. It's the official Indian Railways online ticketing portal. I'm sure you must have guessed it by now, but if you have still not guessed, I'm going to give you some more hints. DIs are increasing stake in the company a little bit, but nevertheless they are doing. Another hint I would like to give you about this company in KYC today is the valuations are at 5-year low for this company, and stock itself hasn't performed much, but weak numbers have come in. So is there any value here? That's the big question to be asked. And the company in focus is pretty much interesting. It was established in the year 1999, so it's technically a Gen Z company. The company in focus, I'm sure you all know, is IRCTC. Today we'll be talking about this, but there are so much overhangs in the stock. We'll try to get that from the management, and that's why I've prepared a list of questions, which is very much important. Earnings, especially on the margins front, there is a pressure. Will that continue or not going ahead? That's the first question we'll be understanding. Has the travel been impacted because of geopolitical crisis, and if yes, how much of that impact is coming in the railway bookings? Also the catering and the rail near business, how is that looking? All companies looking, of course, in the tourism segment also, and when in terms of growth, the update on the new website, this upgradation itself is a very, very big trigger for IRCTC. Also, we'll try to ask this segment of tourism segment, and recently they introduced even Japan tourism packages, pretty interesting, coming in from IRCTC. Also, other question would be the Vande Bharat sleeper cars. What's the potential here? What kind of cross-selling can be done? So these are the important questions we will try to understand from IRCTC. But let's understand what's the business of IRCTC. I'm sure a lot of you know, you must have opened your phones, websites to see the website. It's the official Indian Railways online ticketing partner to start with. But more details is it was established in the year 1999, manages online ticketing, catering, and tourism segment as well. It's just not ticketing, it's a Navratna enterprise as well, as we talk about it. And going ahead, also another important factor about the company is it holds a virtual monopoly in online train bookings. Of course, there are some private players also like Ixigo, which are indirectly the competitors of IRCTC, and they have exclusive branded packaged drinking water which you generally buy. It's called Rail Neer. I'm sure you know the logo also about it. Also, they have premium trains also, like the Maharaja's Express, specialized Bharat Gaurav trains, and this is where the magic happens, especially for the tourist coming in from foreign. 89% of tickets were booked online, so you can imagine it is the future. Almost is expected to click that 90% mark as well. But when you book something in IRCTC, it's a very interesting fact I would like to talk about. The verified Aadhaar linked user IDs can book up to 24 tickets per month. Of course, if it's not verified, then you can do max at the most 12 tickets. So this is a very important booking basings if you are going through IRCTC. Also, it handles an average of over 7 to 12 lakh bookings a day. Can you imagine how big this is? Also, let's talk about the second fact for IRCTC. The portal serves over 10 crore verified customers. Look at the scale, look at the data which IRCTC manages. Q1 performances, largely catering segment has done well, and even the tourism segment we see a 14% growth has come in when it comes to the revenue analysis. What was muted was, of course, the online ticket. Con call, 4 important things. The margin weakness is driven largely by tech investment, and that happens since it's technically a platform stock. Second important con call is the catering margins. That should normalize towards the historical 10 to 12% range going ahead. Third important con call highlight which I took was the rising Vande Bharat volumes. That has remained a key driver for the stock, and we're going to look about that reason as well, and the meaningful potential from the non-fare revenue segment, the payment aggregator business, that is of course subject to RBI as well. These are the important con call highlights which you should note down. But what may work for IRCTC in current situation? Majority of the analysts are having a buy rating, and do wait with me. One of the last ratings in KYC is analyst take, and I'll give you the exact number. Valuations are attractive right now. Is it the lowest? That you need to wait it out for us. The third reason is the monopoly nature of the business. Will this continue or not, or will this be questioned? That's the ask. The tech upgrades are going on, and once the benefit starts coming in, there is a good volume up move we can expect, especially if you understand tech. But what may not work for IRCTC is the declining return ratios because of these investments in tech, and that's the slide which is coming in. The platform stocks are out of flavor on Dalal Street right now, and that is where maybe the valuations are attractive. There is rising competition which I mentioned earlier. So these are the concerns which might be there for IRCTC, and of course the margins part, because of this tech investments, and management commentary also looks like there will be pressure at least in the near term, next couple of quarters, to be honest. So this is the entire picture for IRCTC, the good, the bad, but let's talk about the ratings also, the rating parameters in KYC. These are the general numbers which we always track. There's a strict rule of thumb in our analysis, and I've got you these rating parameters to judge the company. Of course, this includes return ratio, street cred, and shareholding also. This is over a period of time. Valuations, we take a 5-year view for the company itself, how it's actually panning out, and last but not the least, the analyst take. How many analysts are having a buy rating, sell rating, or even a hold rating? Let's talk about income statement first and see what's happening here. Largely the income statement is pretty decent, revenue going up almost 14% CAGR, but the concern starts coming in when it comes to the margins. If you can pull out the Q1 numbers where I mentioned you, there was a little bit of concern coming in, and which is there here. That is where we see that some concern comes in, and because of that, to balance things out, I'm going to give this a neutral rating here. Balance sheet, it's largely very nicely put. Margins is also like a decent 35-36% margin does come. So it seems like it's a normalized margin. Not much of a change, to be honest, happening. But yes, quarter basis, just Q1 numbers is something which I looked at. So I've given this a neutral rating. Balance sheet, let's pull out and see what's happening in that. It's a largely well capitalized balance sheet. The business model is such, it's a platform. It'll always have a very good chunk of cash also, almost 2800 crore plus of cash is there. So there's no problem as such. That's why I'm going to give this a strong thumbs up when it comes to the balance sheet. So we spoke about the income statement, we spoke about the balance sheet. Let's talk about the cash flows. This is largely a very stable business model, and cash flows will also be quite lumpy. See the jump coming in from FY25, a good jump in FY26 of 1274 crore rupees. Even the conversions have been pretty strong. So net, even if you include the tech investments, it's not going to impact so much on the cash flows. It's a very cash heavy business. So I'm going to give this as well a strong thumbs up. But return ratio, let's see what's happening here. In this business model, the return ratio is pretty high, around 40 to 50% for ROC, and they have maintained that, though a little bit of dip has started coming in and it has come below the 50% mark in FY26. So a little bit of concern definitely comes in, but it is still a very high rate, to be honest. The rate of fall is also not that alarming. So I'm going to give this a neutral rating when it comes to the return ratios. Apart from the return ratios, let's talk about the shareholding. Largely unchanged, government owns it. FIs, there is a slight dip from that 7%. It has come down to, you could say, 4%, but DIs have been lapping up, especially last year. This is where slightly they have increased their stake to around 15%. So it's net quite neutral, no major action is happening. So I'm going to give this a neutral rating as well. But let's talk about the street cred, how much the stock has actually made returns for the investors, and the data is very dismal. From 2025 highs, the stock is down 32%. You beat 2026 return or even 1 year return, the stock hasn't performed. But the biggest pain is for the long-term investors. Last 5 years, the stock hasn't even given a positive return. It's down 5%. So whichever way you look at, short-term, medium-term, or even long-term, there is a concern, and because of that, I've given this a strong thumbs down when it comes to the street cred. Valuations, on the other hand, if there is so much fall, the valuations do become attractive. So the 5-year average is at 52 times. Currently, it's trading at 41 times. It's at the cheapest 5-year levels which I could think of. The peak levels were almost 2 times of this at 115 times. So nevertheless, the valuations look very, very cheap right now. But the question is Dalal Street willing to give that much of premium valuation to a platform name, and that also railways? Because both of these factors are technically out of flavor right now. So because of that valuation, I'm going to give this a strong thumbs up. The last one is the analyst tech. Let's see what's happening here. One side, there are totally 8 analysts tracking. There's nobody talking about a hold. There's a sell coming in from 37.5% of the analysts, but on the majority side, 62.5% analysts still feel it's a buy rating. 12-month target price, of course, from the current levels, 20-30% upside potential, is at 606 rupees per share. So it is still a neutral taking when it comes to the overall analyst stake. But we have discussed with you all the 8 rating parameters. Let's do a small revision and give the final KYC ratings for IRCTC as well. Income statements was neutral, but looking at balance sheet cash flow, it is pretty strong, no major concern. Return ratio slight dip definitely coming in, but returns haven't been made, and that's the big concern coming in for the street cred. And because of these lower returns, the valuations do look attractive, but the analyst community is divided for this counter. So overall, let's give the entire KYC rating for IRCTC 5 out of 8. It's largely in line to slightly positive for the general numbers which we give in KYC. So it'll be a very interesting conversation we'll have, but time for a quick break. And on the other side, we'll be having a chat with Rahul Himalayan. He's the CMD at IRCTC, and he will answer to all our queries. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning.
Welcome back to Know Your Company. Now we are joined in by Rahul Himalayan. He's the chairman and MD of IRCTC. Good afternoon, sir. It's always a pleasure to have you. Sir, did you see the impact on the travel which has happened in the first quarter due to the geopolitical crisis? And do you think this sustaining in the second quarter as well?
Overall, we had a revenue
of 1370 versus 1160 in the quarter of financial year to 2025-26. So in this, as far as the impact is concerned, first I would like to talk about the revenue mix and all. We saw that in this 1370, 732 came from catering, 109 from rail need, and internet ticketing 361, and from tourism 168. So there was a delta of 210 crores between 1370 and 1160. To this delta of 210 crores, catering itself contributed to 181 crores. So catering has a margin of around 10 to 12%. Conventional margin I'm talking about. Internet ticketing has around 80 to 85%. The tourism has got 14 to 15%, and rail need 14 to 15%. So one thing is that 181 out of 210 crores, which enjoys only a margin of 10 to 12%, which is 54% of the total revenue. That was one of the reasons for our profits not scaling up, number one. Number two, the West Asia crisis impacted the rail need segment largely because the cost in the raw materials such as the resins, which account for the preform, caps and shrink rolls, impacted the cost to grow from 55 to 61 crores, that is 6 crores plus. Then there is a HR decision we took where the gratuity was increased from 20 to 25 lakhs, impacting around, and the post-retirement or settlement benefits. So this impacted around 20 crores, of which 10 crores was booked on catering itself because catering forms around 54%. And lastly, the POC, the proof of concept trains, which were not there in quarter one of financial year 25-26. There were 6 trains in around 4.7 crores of that impact in quarter one of financial 26-27. There'll be around 4 trains in quarter 2 and 2 trains in quarter 3. So these were the debilitating or the retrograde factors which caused our EBITDA to come down. West Asia crisis stabilized, HR will not repeat, and as I said that there's a tapering in the POC. So with all these and with the introduction of new Vande Bharat sleeper trains, we will try to maintain our EBITDA margin 30% plus.
Right. So this 30% plus EBITDA margin likely to come from catering to rail need.
See, our ticketing is also growing to the extent of 5 to 7% as far as convenience fee is concerned. And in tourism, we are going to grow leaps and bounds. From 745 crores, we have reached 890 crores. This time we are planning 1000 crores plus. We are planning the induction of a Maharaja's rake, whether that will be able to see light of the day in this financial year or next. Bharat Gaurav trains, we have proliferated beyond the country. In the Indian subcontinent, we have gone to Bharat Nepal. We have done Bharat Bhutan, with Bhutan being managed by road. Then in Northeast Discovery, we have reached even Sairang, which is the 6th northeastern state to be connected by rail. Then we have gone to Bharat Sri Lanka. So that spirit of pilgrimage and spiritual, we are encompassing and enveloping the entire subcontinent. In tourism, we are also focusing on MICE, meetings, incentive, conference and exhibition, an area where we were not much into. But with that also, we have divided the entire country into 5 clusters, fixed service providers, whether it is various ministries, PSUs, agencies. So that is one business which will help tourism to grow. And with the coming up of the unified portal where IT and tourism will meet at crossroads, there will be an interface where 5 factors such as scalability, then UX, UI experience, the technology, then financials, and lastly the marketing regimen will help our e-ticketing customer base to use the tourism products of IRCTC. Other than this, in rail need, we have got expansion of 2 plants, augmentation of 2 plants, that is Danapur and Ambanath. Ambanath from 2 lakh bottles per day to 3 lakh, and Danapur from 1 lakh bottles to 2 lakhs, and 4 new plants coming up, Prayagraj, Mysore, Ranchi and Bhagalpur. So with this, and in catering with anticipated around 15 to 20 new Vande Bharat sleeper trains coming up, we are expecting to maintain a EBITDA margin of 30% plus.
And Rahul sir, a lot of tech investments are happening and everybody is waiting, including the consumers, about the new website. What are the timelines for this upgradation?
As far as the new website, it has already been launched as far as the beta version is concerned on 15 July. Now around 80 to 85% utilities and interface has been developed on that website. Anytime, maybe 15 days down the line or in this quarter, we will be able to come up with the full-fledged version of the website, which speaks about no advertisements, no captchas, no pop-ups, and giving a seamless booking experience with faster ticket booking speeds to the user.
And Rahul sir, looking at the current, revenue breakup, it is skewed towards the catering and even the internet tourism. How is this likely to grow going ahead? A lot of new plans have been announced by RCTC also, but how does this revenue mix change?
Yeah, like in catering, you have seen that there has been a growth of around 34% itself as far as the revenue is concerned. In tourism also, in the profit margins, there has been a sizable growth of around 46%, in revenue around 14%. So with tourism, with new concepts coming up, catering and internet ticketing are more or less controlled, work in controlled environments. But in internet ticketing, like you saw in 24-25, we were 1,200 crores, 800 crores for convenience fee and 400 crores for non-convenience fee. That is a non-fare revenue. In 25-26, we were 1,500 crores with 1,000 for convenience fee and 500 for non-convenience or non-fare revenue. So we will also focus more on the non-fare revenue and using our e-ticketing expertise, like in collaborating with various metros, as we've already done with DMRC, NSRTC, and being a e-ticketing expertise being utilized in like Char Dham, Kedarnath Yatra, with the Lakshadweep ticketing administration, Andaman Macruise, and all these areas where there is no component of railway, but we will utilize the expertise in providing services to them. So in this way, we are planning to grow.
Right. And what will be the numbers for this year, the growth numbers which we are targeting?
Growth, like I said, that we'll try to maintain the margins in catering 10 to 12%, rail near and tourism around 14 to 15%, and IT around 7%, because convenience fee has more or less stagnated. With we are reaching around 90%. It is around 88.7%. But with all this, the exact figure I cannot give you, but we'll try to grow year on year, maintain a CAGR as we have been doing in the last 3 years.
And sir, speaking of Vande Bharat sleepers, as they are coming, what kind of growth we can expect across your verticals,
See, talking about cross traffic from other people diverting to railways, that is of course there, because railways, whenever we talk about a longer lead, then people try to shift over to railways. But with more Vande Bharat trains coming up, like 15 to 20 trains may come up in this year. That is a Vande Bharat sleeper, which have got a longer lead, more capacity, plus a passenger growth of around 8%, plus augmentation in the existing trains. In this way, our two segments will benefit. One is the catering and second is the internet ticketing, with the growth in trains and passengers.
Well, fair enough. You have given us an entire picture of how the growth looks like, and especially second quarter is something which we will be targeting for the company's website to come in. Beta version is already there. Thanks a lot, Rahul sir, for taking out your time and giving your views on the company and the industry as a whole. It's always a pleasure to have you with us at NDTV Profit. But let's do a revision of the KYC ratings, how things have panned out. Income statement has, largely been decent enough. The balance sheet cash flow, the way the business model is, very cash heavy business model, so that's not a problem. Problem little bit is coming on the tech investments, and that is eating up the margins and maybe the return ratios as well. And this is what the numbers we have given. So we try to make it as fair and square as possible in our analysis. Street cred, however, has been a big pain point. If you're an investor, long term, you haven't made money last 5 years, the stock has given negative returns, and also in the short term also seems to be a bearish sentiment. Looking at the numbers, the Q1 numbers were on the weaker to mixed side, and the valuation makes it quite attractive, especially if you look at the 5-year average valuation, that is at its lowest levels. To put that in perspective, 12-month forward P is 41 times. Analysts take both sides, it's divided, and the overall KYC rating after talking with the management also stays at around 5 out of it, largely in line to slightly positive. But yes, it's going to take some time once we start some more green shoots coming in this counter. But as of now, it is out of flavor in Dalal Street, be it platform stocks or even railway stocks, and now you add both of them up. But this is what you get. So for interesting stories like this and much more, stay tuned to NDTV Profit, and yes, keep watching KYC.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions.
Hi, thanks so much for joining in. You're watching NDTV Profit. My name is Alex Matthew. With me is Hiral Dadia. And first of all, from both of us and the entire NDTV family, here's wishing you and your families a very, very happy Independence Day. It's a day of celebration for everything that has been achieved over the last 79 years, but certainly it's a celebration of the optimism and the promise that India holds for all of us. And to celebrate this, we've got a stellar lineup over the course of the next half an hour, starting with Sandeep Tandon, the founder and CIO of Quant Mutual Fund. Sandeep, thanks so much for joining us today, and wish you and your team as well a very happy Independence Day. I was doing a little bit of reading. Hiral and I actually were doing this earlier today, and we discovered that you started your career around the time when India was completing 50 years of independence. And so therefore, the first question that we have for you is, when you were starting out and you were looking at India at 50 and looking forward at the opportunity that it presented, how much of that has been achieved in your opinion? And two, as you stand right now, after all of these years, what are the promises that you see at this moment?
So frankly speaking, a lot of things I've achieved, but expectations bound to be on a higher side. But the way I look at now, I think it's a India moment, and maybe in next 15 to 20 years perspective, if I talk about, I think demographic cycle in our favor. We are extremely constructive on India as a asset class, if I have to say, and maybe by 2047-50, we're going to be in a structured bull run, because the changes and reforms which you have seen and the turmoil which you're seeing in the global market. And I think this turmoil is going to stay there for a slightly longer period of time. With that background and on relative basis, I think India has done remarkably well. And we are, if I have to say something has changed in India, so if I have to talk about purely from a perception analytics, India perception has changed, which means India P multiple, which is slightly elevated, and it will remain elevated from a longer term perspective. At least till 4750, we expect the P ratios of Indian companies will remain elevated. So I think it's a constructive background, both in absolute terms and relative basis. I'm not looking at next 2 months or next 6 months perspective.
You know, it's an interesting point, Sandeep, that you make, and Hira on this side. We've spoken about India at 50. Right now, India is at 79. Would it be right to say that India is no longer only a promise? It is more of an opportunity that everyone is sitting on. And with India, when you said it's India's moment, would it be right to call it India's Swadesi moment at this time, because you have all your domestic and retail investors who are actually participating in the markets right now, whereas your FIs are still on the sidelines?
The way I look at, see, from a FI perspective, we have to understand they don't look at absolute return, they also look at the relative opportunities. So the relative opportunities were far better in last 2 years in the emerging market as well as the US market. So obviously money is bound to shift there. But as we now entering the second half of this year, and we are seeing an acceleration in anti-AI theme, which is gaining momentum. And if we believe this anti-AI theme is a reality, then I think India should be a huge beneficiary of that, because we were degraded or downgraded in this AI theme scenario. And now we should be a logical first beneficiary. And that's the reason money is coming back. Even if you look at FIs have come back, not with a bang as we expect, but you have to again look at they were big time seller for last many quarters. At least if I have to say in last 1 quarter, selling pressure has come down, and month on month we are seeing actually slightly incremental flows only. Maybe large volumes are coming from the passive side, but ultimately volumes are picking up. FI participation is rising. I think background is more constructive as compared to what we were there a few quarters ago, or maybe even last quarter.
Interesting. Sandeep, you and your team are students of data and you back a lot of your decisions based on that. So what are you seeing now that maybe a large part of the rest of the market, in your opinion, might be ignoring?
I think if I have to say, maybe your last 2 years of underperformance, somehow extreme negativity is there, so much deep rooted, if I have to say, is there in the subconscious mind of most of the participants, including best of the money managers, best of the strategists, best of the analysts. That's the reason you are seeing the maximum downgrade about India came in last 1 quarter or last maybe 2 quarters or so. And that mindset is not changing at all. Okay, it has improved, but I think the bearishness is still there. This is the most important data point which I am observing. When we see extreme pessimism, which is getting so deep rooted, then obviously, which means worst is behind. And this is what we said on the 1st April, that worst is behind us. And it's not time to capitulate, it's time to capitalize this opportunity. And if you really look at right from 1st April onwards, market has done extremely well. If you're on the right side of the trade and right stocks, if you are, actually you have made money. The challenge is people are not coming out of that shell, which for last 2 years they were unable to perform. And you have to also see whatever has performance which you've seen in the past, those same stocks or same sectors are not going to perform going forward. And hence, this is a time to rebalance and rejig your portfolio. And I think if you keep a slightly more constructive mindset, I think you will see opportunities.
Okay. So with regards to where, the next opportunity goes, Sandeep, you're talking about extreme pessimism, which always becomes an opportunity for someone who's tracking the markets like the way you are. Where are you seeing this opportunity? Because a lot of conversations happening that, okay, is it the data center moment, because India is an ancillary play when you talk about AI to some extent? Or apart from that, you're talking about AI and the Magnificent Seven that come in the picture as well from a global perspective. So where are you on it?
See, if we really believe that anti-AI theme has begun in India or globally, then obviously money will come to first sector, which was biggest affected party was the IT services. And we have seen a turnaround in IT services. Actually, they have recovered a lot, maybe 20-30% from the recent low, which we have seen. That's the one sector. Second thing, obviously, money is now coming towards the hard assets, the real assets, where we're talking about the utility companies or the power companies or the ports company or the airport company. These are the areas which I'm seeing. Auto ancillary is another interesting space which is getting built. So anything related to data center, okay, though it is, if I have to pay, when I talk about one side NTI thesis and second side I'm talking about a data center thesis, because India is in the very early stages of that. Okay, I don't think we will get impacted. Rather, anything related to data center, the theme, whether we talk about power, telecom, optic fiber, select IT companies, equipment providers, and that's a theme which I think has potential to last from a longer term perspective. Anyway, power or energy as a theme, we are more constructive, even say maybe till 2032, we are in structural mode. So I think the opportunities are there. Auto Bank has done so well as compared to main auto companies, So defense is another area. If I have to look at it, they also have corrected a lot. So there is some opportunity should emerge in this. And apart from mainline company, I think some of the ancillary companies which you have to look more closely, and they have done extremely well. So it's a question of how well you're able to spot these opportunities.
It's a very interesting point, Sandeep, that you've made, because you haven't in the past been afraid to fish in the deeper waters, right? And therefore, to the point that you're making, and let me also throw in the energy theme to say that obviously globally there is a movement towards more exploration and production, and in various industries, Sandeep, the picks and shovels guys are the ones that are making hay at this moment. So in your opinion, obviously market capitalization is not a factor because depth of the Indian market is getting much deeper. Is that something that you're looking at, the picks and shovel spaces?
Answer is yes. Okay. And as you rightly said, the depth and the breadth of Indian capital market has improved significantly, and which is a very good news from a equity investor or anybody who is participating in the capital market. Though a lot of people are slightly worried in last 2 years, the impact costs have risen, volume have shrunk a lot. But overall, we are not at all disappointed the way even reforms are happening in the financial space. So I think it's a moment which is one has to recently we have seen the CAS has implemented. So it's a new thing which is coming into our life. The most important aspect is that retail investor have actually showcased signs of huge maturity as compared to their previous behavior. And this is one of the reasons why we are able to absorb lot many selling which came in last 2 years, particularly from the FI side. Domestic mutual fund flow was so meaningful and retail participation was so large that we were able to absorb. And this is the changing moment. If I have to say what has changed, I think the retail participation has increased. And I think if I don't want to say exponential, but I think it will momentum remain. And that's a very positive news from Indian capital market perspective, which means even the large selling can be absorbed. And you just imagine a scenario when these FI selling comes down drastically purely on the relative basis, if they see India becoming more attractive, then India has potential to accelerate in terms of return, which we have missed out. So maybe it's a time for small consolidation phase, but ultimately things are looking good for India.
Yes, so things are looking good for India. Sandeep, how do you look at the freedom from energy dependence as an opportunity when you have to take India into context, and how big an opportunity will that be according to you?
See, frankly speaking, the current government and PO himself has taken so much initiative on the green energy side, which is playing out very well. Obviously, now challenge is more on the transmission side. So we expect a lot of things happening out there. And then the storage aspect, which is also important challenge. But what the good news is that both from the public sector and the private sector, we have seen good amount of capex happening in this space. People have at least understood. Now the challenges which we have seen very recently about the LPG and LNG. I think the storage facility, we believe a lot of efforts are getting talked about how to increase that capacity. I think in next 5 to 7 years, you will see that area also will be strengthened further. So I'm more constructive, and given the government interest in this space, and everybody was slightly shaken what happened in the Middle East very recently, it is actually helping us to start thinking on those lines. So which is the good news, because I always say in India, after every crisis, we have strengthened a lot. So I think sometimes crises are required for this country to strengthen. Maybe it's a wake up call, but I think it's a steps in right direction.
Sandeep, not to generalize, but in the earnings season that we've seen gone by, in a lot of cases there has been a better performance than was anticipated, particularly in the broader markets. The thing is that there are a lot of pockets which we've already spoken about, which are discovered, and therefore the valuation metrics, the popular ones at least, look a little high. But would you argue on the other side to say that the potential and the likelihood of a long tail for some of these industries and companies is such that it's justified and you should not miss this opportunity? And where do you think that those opportunities lie right now?
See, frankly speaking, we as a house who is a slave of data, and we talk about the VLRT framework. So valuation is the important backbone, but it should be also looked in tandem with how the liquidity analytic and risk appetite, that basically the sentiments which are prevailing. The way I will look at many names in India we have chased, and so-called new age companies where a lot of excitement is there because top line growth is quite visible and is quite remarkable also. But given the valuation which you think, that gives us huge amount of discomfort, if I have to say. What is very important is that you are also getting many names are trading in the neglected, hated zone. You look at realty sector, because of IT, people have given up in that sector completely. I think some of if we believe in India demographic cycle, and if we believe something has changed in India, I think real estate is going to do very well in long term. Maybe not that's a return which we have seen. So I'm just giving a small example. Like few years back, people have given in the power sector, utility companies to get very low valuation. PSU was a very classic example where people who were allergic to PSU names, PSU will not participate. And look at some of the PSU companies have done extremely well as a theme has played out. So I think we as a house is always look for opportunity. Rather, I will say risk-adjusted opportunity. That's the theme we like to play, and there are enough opportunities available. Okay, why to chase only select name where tailwinds are very high and perception is equally good and everybody wants to participate? I think I would like to, not taking a contra call, I would like to avoid these all over-admire, over-research and over-hyped company. I think it's the time to look at some of the neglected territory stocks, and they should do very well. And textile could be one sector which we look at. I talked about real estate as a sector which is looking good. Pharma has been opportunity for a while. Even IT sector, IT services sector, we turned positive for last 2 months. There also we see some amount of opportunity. Energy obviously is a very green sector from a longer term perspective. Well, there are opportunity. Telecom is a big theme which you should look at opportunity. Optic fiber is a big theme. Telecom equipment is also a very meaningful theme which is playing out. I think these are areas which you look at.
Sandeep, then my question to you is, with the framework that you function with, right? If you have to look at timing, if you have to look at valuations, if you have to look at liquidity and risk appetite, right? How would a retail investor take into consideration these inputs? Because it becomes absolutely crucial when you're thinking from a quant perspective.
See, frankly speaking, some of these areas which we specialize are data driven and slightly complex. You need to have access to these data first, and then you should have understanding how to convert the data into an intelligent decision making process. The best option is to participate through mutual fund route, and quant mutual fund should be opportunity for large retail investors. That's on a lighter note. But what is more important to understand, and you can see when you look at the market, when pessimism is on a higher side, the give up mindset is there, people are getting capitulated. We have seen vomiting happening in some of the cases where results were slightly weak. People have given up, completely 8, 10, 20% fall. And if you are seeing a value in some of these names, because what is happening right now, the buying interest is on the lower side. Whenever any news happen or any tweet comes from Mr. Trump, people generally try to unwind their trades on a quickly basis and buy and disappear. And that is the one of the reason the price impact is more meaningful, okay, on the both the sides. So I think we as a house actually thrive this opportunity. Okay, if you can play on both the side and keep your emotions under control, I think you should be winner. So I think instead of getting capitulated in this narrative or noise which gets created now in the social media also in a big way, what is important, if you can segregate these noise and identify a few larger themes, okay, then there's opportunity, and an appropriate time you see stock has corrected 20-30%, and you think this is the sector which you like. If you have your sheet, let's say stock which you identify is already, list is already ready, you look for opportunity in extreme pessimism rather than you also getting capitulated along with that.
Yeah, that's a good point. That's a good point. On that note, Sandeep, thanks so much for joining in. Pleasure speaking with you, and once again, wish you and your team a very happy Independence Day.
Yeah, thanks a lot.
Interesting points.
Interesting points and interesting strategies as well, because everything is not only fundamentals. A lot of it is probabilities and possibilities as well. In fact, let's get in our next set of guests as well. We have Abhay Agarwal, Managing Director at Piper Serica, joining in, and Aman Chauhan, Fund Manager at Abacus Asset Manager. Welcome to the show, gentlemen. Always a pleasure to speak to both of you as well, and wishing you a happy Independence Day. Abhay, let me start off this conversation with you. In fact, we posed this question to Sandeep as well. The question is, at 79, what is that opportunity that you are seeing that will actually develop into a wealth creating idea when India is at 100?
Yeah, hi. Thank you for having me, and wishing, in advance everybody a very happy Independence Day. We are growth investors, and for us, whatever we are seeing, whatever we have seen over the last couple of years, I think the big opportunity for India, which is already emerged and is going to emerge in an even bigger way and give a lot of opportunities for investors, is the whole innovation-driven manufacturing play. And you are seeing young companies, which may be small caps right now, some mid caps, getting rewarded by markets for their outperformance, which has come from years of investing in innovation. And this is across innovation in pharmaceuticals, it is innovation in electronic manufacturing, in auto components. So I think the clear future is, as an opportunity for Indian investors, global investors investing in India, is to back the emerging Indian companies that are really committed to R&D, developing unique intellectual property, learning, scaling very fast, using the volumes that they get in the Indian market, becoming very competent manufacturers, and then exploring the global markets. And the good news is that the global markets are very receptive of Indian manufacturers right now. There is no baggage there. All the companies that we talk to are either setting up their own presence, acquiring small plants in developed markets, doing product registrations, product certifications, accessing large global OEMs, and who are not looking at India as a cheap provider of manufactured items. They are looking at India now as somebody who's an integral part of their de-risking their global supply chain. So I think immense opportunities for investors, as long as they can take their eyes away from traditional sectors, traditional large caps, and focus on these, fast growing small and mid caps that are focused on manufacturing.
Good answer. And thanks so much for joining in, both of you gentlemen. Aman, I'll come to you, and effectively let me ask you this with a slightly different tilt, which is those companies and sectors that were predominant in the first 26 years of this century, effectively from the time that India turned 50 to now. Some of them are losing ground, based on what Abhay has also described, to say that don't focus on the frontline companies. They've run their race. The next race is going to be run by these smaller, more agile companies that are not just using cheap labor. So where do you see the opportunities?
See, what you say is right, but frankly, this was right 25 years back also when we turned 50. At that time also the bigger companies, because of a higher base, were unable to get the kind of growth which markets like, and the smaller companies grew faster and their were much bigger wealth generators than what the larger companies were. Sectors were different. That is the only difference. Even today, that's the case. There could be a larger company also in the same space. For example, the other speaker mentioned about manufacturing, or you can say technology focused manufacturing, which is true. Same is there could be larger companies there which might not grow the same way as a smaller company in the same sector would be, right? So that call of large company versus mid company always there. It is there today. It will be there 5 years later also. Specifically coming to the opportunity, besides the manufacturing opportunity, which my colleague also shared, I think there is one more big opportunity which India can capture is getting its share in the global trade. Right now, it's sub 5% share in the global trade. We are a very small player, which is completely dominated by China, right? So one side, manufacturing will pick up because of domestic consumption. We want to reduce the import dependence. At the same time, with rupee at 95, we are now very cost effective also on the global export front. This is also a big opportunity, and it is across sectors. So it is not, it was IT for the last 20-25 years and maybe pharma along with that. Now chemicals, engineering, cap goods, lots of these sectors can take a decent share of the world trade. And I believe that is something which can be the next 10-20 year growth opportunity for Indian corporates.
Okay, so Aman, basically you're talking about more on the defensive side as well, where there is an opportunity that is coming in when you talk about pharma as a sector. How are you looking at the BFSI space, the financial space? Because the moment you see infra and these other sectors picking up, there is that correlated benefit that does flow through the banking space as well. How are you looking at it from an opportunity perspective now?
See, broadly, on a simple term, no economy can grow without the financial sector participating, right? So obviously, we'll grow, the credit growth will come in, and the financial sector will benefit. But who within that will be a bigger winner is the call we have to take. Our pick is we like select NBFCs, companies that are among the top 3-4 players in the respective sector that they operate into. Second preference will be private banks. Within the private banks, as we just discussed, the larger ones have run the race. They'll still grow, but it's going to be a small growth rate on a very high base, the likes of the GTFC, ICICI, or the larger banks. And hence the preference is towards mid-sized private banks. So this is the pecking order that we have within the financials. We like NBFCs with the larger NBFCs, and within private banks, the mid-sized private banks.
Oh, okay. All right. Abhay, I want to come to you on the next one, which is that you described manufacturing, but I want to ask you to perhaps, if you possibly can, be a little bit more specific in what exactly you're looking at, because some of these auto ancillary companies are no longer just auto ancillary companies, right? They're diversifying into aerospace, into precision engineering, right? So how would you approach investing in the space, and what are the contours?
Now, Alex, we are very excited about this whole, technology-led, IP-led, R&D-led manufacturing space. And as you said, the companies that have strong engineering skills will look constantly for adjacencies to grow into using those engineering skills. So if the large market is presenting itself in the form of robotics, AI-based IoT, defense, and defense has multiple aspects to it. I think it is but natural that these companies will grow into their agencies, and because of their manufacturing scale and capabilities, they will find high receptivity also. And that's what I said, Alex, in my first point, that there are plenty of these companies. I obviously, would not like to name them because of SEBI restrictions, but what I can say is that in the space of, say, 5,000 crore market cap to 50,000 market cap, the good news is that there are enough opportunities for investors to look at. And specifically the theme that you mentioned, companies that have been very good in their core segment, now using the same skills to go into newer industry verticals and finding receptivity. I think you will see these companies double in 3 years' time, triple in 5 years' time, at margins that will increase, balance sheets that will not be used for leverage, the growth will be self-funded. So I think these companies are like a long-term investor's dream. You can easily look for an IRR of 20% over next 5 years just backing these companies, as long as you're ready to dilute your focus on the traditional P multiple and look at actually the price earnings to growth multiple when you look at these companies. Because if investors are going to screen these opportunities only looking at traditional P multiple, they'll always find these expensive.
Yeah, that's a good answer. Abhay, and I understand you can't get more specific than that, but you've told us as much as you could. On that note, Abhay, Aman, thanks so much for joining in today, and pleasure spending time with you.
Thank you.
All right, so, well, I think that sums up the promise that India has for the investors.
Opportunity that India has,
The
promise
opportunity.
is already made.
Absolutely, absolutely. Heading into 2047, let us know what you think about some of the things that we discussed in this program, and stay tuned, lots more coming up over the course of the day. This is NDTV Profit.
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
ऑक्सीजन के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे? टाइगर कैसे? Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy, sell, hold.
to sell, what to hold. Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. only on NDTV Profit.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. only on NDTV Profit.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every. Hello and welcome to NDTV Profit. You're watching trending stocks from the NDTV Profit Suzlon studio with me, Heera Aldadia. But first up, let's take a look at what's happening in the markets right now as we speak. Absolutely lackluster. We are below that 24,400 mark. This week seems like a non-event for the markets. To which, let's quickly look at the factors that we are watching out for, because it's a no fun Friday. Nifty below 24,400. Secondly, if you talk about Bank Nifty as well right now, the range that we are looking at is somewhere close to 57,000 to 57,400. The volumes itself have been on the lower side. In fact, if you talk about the overall volumes on the back of cash, they have been reducing. Let's pull up Z Entertainment. That's the stock which has actually pulled Nifty Media Index up in trade as well, and all the other sectors are kind of trading in the red. In terms of today's session, a couple of companies that are in focus: Ashok Leyland, Bharat Dynamics, Cochin Shipyard, NMDC, Patanjali Foods, Voltas, all of these companies that will be reporting numbers. And the key is to track the US retail sales data as well. So all in all, a day of consolidation that continues. No major moves, but a lot of stock specific action is what you're watching out for. If you have to look at individual. In fact, from manufacturing and exports to defensives and green energy, India Inc.'s growth engine is firing on multiple fronts. We've grouped these opportunities into saffron, white and green themes. Representing the key pillars of India's economic transformation, let's explore the stocks leading this tricolor story. In fact, let's explore the saffron stocks with Parth, followed by Puneet and Varsha, who will discuss the white and green stocks respectively. Over to you, Parth.
Thank you, Hiral. Saffron as a color signifies growth, and India has spent decades building building the foundations of its growing economy. Today, that growth is spread across sectors, be it manufacturing, be it exports, or be it consumption as well. Everything is just scaling rapidly right now. Indian companies are scaling, and they are coming to conquer the world. And that's why we have compiled a list of companies that have grown their EBITDA by a significant margin in the last 4 quarters. In fact, let's have a look at the list that we have compiled for you. The first company in the list is Chennai Petroleum. Yeah, that's what I was speaking about, the foundations of our growth economy. But if we could just go to the list of the companies that have scaled their EBITDA, the first one is Chennai Petro, whose gross refining margin have surged to around $9.3 per barrel. That was versus near zero in the same quarter last year. The second one is Newland Laboratories, whose Q4 margin hit almost 40%, and because of the CDMO ramp up that the company has seen. Another one in the list is HFCL, which has seen its exports jump to 41% of the revenue, and margins have doubled to 17% as well. The next company on the list is Eternal, where Blinkit has turned EBITDA positive. That's the Q-commerce growth engine working really well for the company, and that's what has pushed their EBITDA. The next one in the list is LMW, where machine tools revenue have crossed 1,000 crores for them, and offsetting the flat textiles revenue for the company. The next one in the list is PB Fintech, where we have seen insurance premium cross 30,000 crores, growing at 42% year on year, and that's what has pushed the EBITDA of PB Fintech as well. The next one is Cupid, which is exporting its products to around 125 plus countries. That has driven that 93% revenue surge and EBITDA for Cupid as well. The next one is Lloyd's Metal and Energy, where pellet output has tripled and margins have expanded to around 34% as well. And also MTAR Technologies, very big name in terms of EBITDA growth. Clean energy orders have driven that 30% growth in EBITDA, in revenue and EBITDA as well. And lastly, Aegis Logistics, where we have seen record LPG throughput volumes, which led that 68.8% growth in the gas division EBITDA. So these are the top 10 companies that have significantly grown their EBITDA in the last 4 quarters, and this is the saffron stocks, as we call them. And now let's go across to Puneet for the white stocks.
Well, thank you for that. When you think of the color white, it gives you that calmness, the peace and the serenity. And here as well, we are looking at that in your portfolio. So the list that we have compiled is of the defensives of the portfolio that will save you from rainy day. And when you look at that, you think about the IT, the pharma as well as the banks. So the IT sector has gotten under pressure over the last few months because of the AI-led moves. You've also seen banks also starting to come a little bit under pressure because of the net interest margin aspect. And pharma is a time to look at the domestic companies compared to the exports now, which has been the theme over the last 10 to 15 years. So what we have done is compile the stocks in the pharma space with the highest return in the last 1 year. And the question being if they will be the kings going forward too. So Laurus Labs has been the highest return. You've seen that for Sai Life Sciences and Aurobindo, as well as Gland Pharma and Divi's, a 44 to 123% return in the last 1 year. But even though going forward, barring a couple of names, you don't see too much of a return potential. But don't worry, we got you covered, because we've also combined a list within the pharma space that have the highest return potential. And here you have names like Abbott India, Mankind, Sun Pharma, Torrent Pharma, as well as Piramal, which could be something that you should watch out for in the next year. Also, don't forget about the banks as well. Here, you've seen a massive return for Federal Bank as well as Bank of Maharashtra. Both have been big outperformers. But even in the public sector bank side, stellar returns from Union as well as Indian Bank as well. Here also the return potential is actually quite strong still for Bank of Maharashtra, while you've seen a single digit kind of return potential for the rest. But also look at the ones which have the highest return potential. It is HDFC Bank, down 25% in the last 1 year, still has a lot more room to go. Axis, ICICI as well as Bank of Maharashtra, again because of the high return potential features on our list. But the story is very different for IT, because you have seen a lot of stocks do well in the IT space. And if you can show the names on the screen, you see Oracle Financial as well as Coforge. Those are the two ones which have done well in the last 1 year. What's also interesting is they have the highest return potential going forward too, of 11 and 5% respectively. But you have seen saffron, you've seen white. Going to Varsha now for the green stocks that you should have in your portfolio.
Well, I would call Green India, Clean India. I would call our country from energy importer to, clean energy builder. Now, if you see, India has once depended heavily on imported fossil fuels. But now, today, India is amongst the world's fastest growing renewable, energy markets today. Now, solar panels, we are into wind turbines, we are in batteries and green hydrogen, which are becoming India's next manufacturing opportunity. Now, talking about opportunity, investors are actually not looking at earnings today, but they are focusing on the capacity generation that India has been doing when it comes to renewables. Now, talking about bigger opportunity may lie ahead as these assets start, generating the earnings or cash flows for our country. Talking about companies which are in focus, you have Inox Wind, you have Suzlon, you have MV Photo. Don't look at the 1 year return. Look at the return potential. Inox Wind, you have 50% return potential that investors are betting on. Suzlon 31%, MV Photo 22%, though it has given almost 47% in the last 1 year. Moving on, you have Waaree Energies, you have NHPC and Tata Power. All these stocks have huge potential. You have 22% when it comes to Waaree Energies, 15% and 14% for NHPC and Tata Power respectively. But let's deep dive into each stocks. Talking about Inox Wind, well, they are actually shifting from turnkey EPC to equipment supplier. That is nothing but the high margin projects. You have Suzlon Energy, wherein management is actually targeting 25% CAGR for next 5 years. Also, wind installation to accelerate as utilities diversify beyond solar for Suzlon. MV Photo, everyone is actually betting on this company because they are building domestic solar manufacturing capacity, which will aid growth for the company. Even Waaree Energies, they are actually reiterating when it comes to the EBITDA guidance maintained at 7,000 to 7,700 crore. In fact, the major thing is they have massive investments across cells, modules, investors and electrolyzers. Then you have NHPC, wherein renewable portfolio it continues to expand beyond hydro. In fact, they are doing huge capacity, wherein FY27 capex has been planned at 15,000 crore. Lastly, you have Tata Power Company. Renewable capacity is expected to cross 9 gigawatt by FY27 end. So, I would call it as Green India, the next freedom story for us.
All right. So, 3 colors, 3 opportunities, and that's the tricolor opportunity that investors are sitting on. Thank you so much, Parth, Puneet and Varsha, for getting us all the details and all the research that you guys have done, and it becomes an opportunity for all the investors. But moving on, Sharad, over to you to actually now take the rapid fire as well from here on, because a lot of stocks that are buzzing in trade today.
Well, I must say, the hats off to the graphics team. It's looking visually wonderful for all the team out there, Hiral and the entire research team. But moving on to the rapid fire round, first stock is of course going to be Tata Steel also, and Sachin Janardhan joins in with us. Sachin, hi and happy Independence Day to you. Wanted to understand the technical levels, to track, especially for Tata Steel here in the current levels.
So Tata Steel currently on a daily chart had turned from basically uptrend to downtrend, and currently it is trading near the support level. So 180 is a very crucial support. If you are closing below 180 levels on a weekly basis, that will be actually a dent for on charts basically, and then we can say at least 160 and 150 levels on the downside. On the upside, it need to capture 180 levels. Till then we are not capturing, or on a daily or weekly basis 190, we will be in a range of 180 and 190 only.
Right. Your view on LG Electronics, the stock has done well as stock is up also. Do you think this will sustain going ahead? Because after a long period of consolidation, we are seeing more action in the counter. LG Electronics.
It need to close above 1750 levels. Today, the stock is going up, but comparatively when we see the volumes on the first day of the IPO launch, it is very less basically. But still when we are seeing on a weekly basis, we are getting some kind of volume, but we need to close above 1750 from a greater point of view. If we are doing that, then 1950 and 2150, that will be the targets for LG.
All right, apart from LG Electronics, another stock in focus is definitely going to be HEG and Graphite. It's expected that there would be a price hike coming in these counters as well. Let's just show both the charts of HEG and Graphite to get the entire picture of how things are actually panning out, and there is a good kind of a bump up happening. But do you think either of these two counters, anything will sustain, Sachin?
So HEG on charts comparatively to Graphite, it is looking good because it has already given a breakout on a weekly basis as well. So we can see at least a 5 to 10% good run up in a very short period of time.
Right, and just before the earnings, Bharat Dynamics is also in focus. Street is expecting some good set of numbers here. Is there any trade to be made just before the earnings coming in? Bharat Dynamics, the stock is in a consolidation in those levels.
So actually the stock is struggling near the 200 SMAs and EMS levels. The trend is down, so because trend is not supportive, we should avoid preempting that. Any kind of a breakout above 1470 level, that will be good.
All right.
So thank you for that. In fact, I'm going to take the next set of rapid fire questions. Sachin, Tata Motors PV, the management is expecting cost pressures in the second quarter. What are charts indicating?
So compared to Tata Motors PV, I love CV because the trend for CV is good. So I will avoid Tata Motors PV.
Okay, what about a Balu Forge? The outlook is positive. Any further momentum?
So Balu Forge Industries, it is trying to change the trend from down to up. So as of now, if someone is getting profit, book profits and wait for the confirmation.
Okay, what about a Manorama? Because very good returns in the last couple of months. The momentum has continued. Would you advise to stay invested or book profits?
One can book 50% profits in Manorama and rest we can trail the stop losses.
Okay, Praj Industries, strong performance. What are charts indicating?
Basically, sugar industries, we are getting some kind of a traction in all these levels, but most of the sugar stocks are into a downtrend. So any kind of bonds will be a good opportunity to book profits.
Okay, Wellspun Living, strong numbers again. Are you expecting charts? I mean, are charts also telling you that the improvement is expected to continue? Good investment bet.
So yes, we can add in Wellspun Living, especially on dips basically because the run up has already happened. But on a dips, it's a good opportunity to add.
Okay, Nalco Hindalco did have a good run on the back of some global news. Currently trading slightly under pressure. What would you advise?
So Nalco and Hindalco, both the charts are in uptrend. This is a good basically addition if one wants to do it. There is no problem.
Okay, so a good addition as well. But thank you so much for joining in, Sachin. Always a pleasure to speak to you and get all the cues in terms of the rapid fire. But moving on, Electra Green Tech, that stock is in focus, and this is after reporting its first set of numbers. While their revenue grew, what was interesting is that the margins have been under pressure. You're not seeing that kind of profit growth as well. In fact, I did get an opportunity to catch up with the management, that is Mahesh Babu, Managing Director of Electra Green Tech. Let's listen into what he had to say. Joining us is Mahesh Babu, MD at Electra Green. Mahesh, welcome to the show. Always a pleasure to speak to you. Help us understand, 65% revenue growth. It's the e-bus, the mobility business that has driven growth as well. However, the profit growth has remained muted this time around. Costs have increased, and that's what has caused the compression in terms of margins. Is this probably something that will tell you how FY27 is going to look like, or are you expecting a turnaround in the remainder of the quarters?
Hi, firstly, I'm pretty happy that we had a good growth of, as you say, 66%. If you look at the e-bus business, the EBITDA margins points are pretty similar. I would say very minimal impact. But you also know that we have a energy division. In the energy division, Q1 is always a little bit muted. We had challenges in terms of forex and raw material impacts. I think with all the what's happening around in the Q1 globally, I think what we did, we are pretty much sure that we'll be able to pull back. I think we had a good start in Q1. The bus division did extremely well. The energy division Q1 is impacted due to raw material prices increase and the forex, and which is now mellowed down. And we believe that in the energy division, we will have a better margins going forward in Q2 and Q3 as well.
Okay, so Mahesh, are you saying that the profitability pressure that we are seeing is temporary and it's mainly linked to the scale-up costs, or there is a potential where FY27, the margins will be slightly more muted as compared to what you had achieved in FY26, in spite of the uptick coming in there?
See, if you look at the EBITDA, we had a EBITDA impact, as I told you, to the energy division. But if you look at the PAT, I think we are investing for the capex, so depreciation is playing a role. Plus, our capacity enhancement term loans have started, so that payments has some financial impact cost. So if you look at it, the EBITDA bring back will happen in the coming quarters due to mellow down of raw material prices. So I'm sure that the business is at the right path. As we know, we are also investing in the future. So there will be impact of depreciation in terms of capital cost, which we have done, which is building the future. That's how the growth rate comes from.
Okay, and what about battery costs? If I may ask you that, have the prices gone up and how are you accommodating for it?
See, battery price costs have a minor impact because of the forex mainly. But however, we are able to work on cost optimization for the other parts, and we are able to minimize the impact so far. And we are renegotiating other terms as well, and then we are trying to improve the profitability as well. The impact is very minimal, I would say, based on the battery impact cost.
Okay, and as we've spoken about the mobility business, which has continued to drive or dominate the business, I would say, has it come in from higher deliveries, or is it because of a richer product mix?
No, this is Q1 to last year to this year on year. It's based on higher deliveries.
Okay.
We have delivered higher numbers, and hence the revenues are higher. The margins, as I said, had a very minor impact, of course, because of the forex and the raw material cost. But we could able to mitigate it successfully and reduce the impact very small. I would say, looking at what's happening globally and also the impact on raw material and forex, the performance of the team in the Q1 is, I would say, reasonable, and we are very well poised for taking the Q2 and beyond to get back to the growth as well as profitability.
Okay, let's talk about bus deliveries and the order book as well. So how much did you actually deliver in the first quarter? And if you have to talk about your current order book, how much of it is executable in terms of FY27?
So we have invoiced about 358 vehicles in this quarter, which is higher than the last Q1 of last year. So if you look at it, we have about 8,000 plus orders in pipeline, which we have to execute in next 2 years. So as I said, this year our target is to close to 2,000 to 2,500 deliveries this financial year. And we want to ramp up further as well going forward in Q4. So we start with Q1 with a 350. We want to exit with 500 plus 600 vehicles.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए। 28, 29, 30.
तंबी कैसे टाइगर कैसे
Buy now.
Sell immediately.
Hold it, boss.
Buy now. Sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy. Sell. Hold.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Hello and welcome back to NDTV Profit. You're watching Lunchtime Trades with me, Puneet Zaveri. Thanks so much for tuning in. This is a show that gets you a roundup of everything that is happening in the world of commodities, news and updates. And today on the what is also as a key top buzzer that we have at this hour, all while you grab your lunch. Let's take a quick look at what the markets are doing as well, because we've spoken about the benchmark indices and largely being in a consolidatory range yet again, and that's visible on the Nifty 50 today. So we started off the week at 23,570 odd. Let's look at the Nifty 50 now of where it is trading at, because we've seen pressure on the index, seen some revival from the day's low, now at 24,350 odd. So the last couple of hours become very crucial of where we end the week, which has been very range bound as well. Also pull up the sectoral heat map too. Here you're not seeing too much of a wild move actually across a bunch of stocks and spaces today, and especially within sectors, only a couple that are buzzing. So Nifty Media is one where it's up almost a percentage. You're also seeing some moves come in on the consumption, but again just 0.2% up as well. While in the losers as well, Nifty Metal was down 1.5%, has recovered from the day's low, and it's coming at a good time when we are tracking commodities. Also is the advance decline ratio. We've spoken about this in the morning as well. Well, the declines have largely been having a bigger impact to compare to the advances in this week, and that is visible on the screen today as well. So it's been a week where there has been results reactions, but a lot more on the downside is the stock prices reaction as well. Mid cap, small cap also show you that, and the BSE 500 is very interesting as well, because here you are channeling a lot of those gains as well. Both these indexes continue to be in red, but Nalco is one which has seen actually some profit booking today. Stock was up at the start of the week, given up a lot of those. Samman Capital as well as Tata Motors PV, and we'll put more focus on this counter in this show as well, is down almost 4%. What is actually up by 20% is Galaxy Surfactants. Stellar set of numbers, guidance being raised, visible on your screen. So is LG Equipment and Z Entertainment getting some relief today. So up 5.7%. Happiest Minds 2 continues to do well as well. But the gold prices today, and when we come back and talk about commodities, have actually slipped today and are headed for a weekly loss as investors are locking in their profits after a mild US inflation data propelled bullion to its highest level in more than 2 months. We've also seen weakness in that case for the near-term Federal Reserve rate hike, and that that poll is also up where you can see it clearly that the hike is starting to go down, and the aspirations of that as well. Bullion climbed to its highest point since June 5th yesterday, before settling 1.3% lower and setting it on track for a weekly loss. On the other hand though, oil prices stay steady as the fresh US threats to maintain a naval blockade of Iran indefinitely revive the concerns over crude supplies. The Brent is holding above the $87 a barrel mark, WTI 82, but we are now being joined by Biren Vakil. He's the commodity consultant at Paradigm Commodity Advisors, now joining in. Mr. Vakil, very good afternoon to you, sir. Thanks so much for joining in. It's Puneet this side. Just as you look at what's happening yet again with gold and led by global factors as well, how are you reading the current moves?
Seasonality speaking, usually gold tend to bottom out in the second quarter, and annualized top may emerge around September, October, being a festival season. Here, near term, two key events are there. One is Jackson Hole meeting, August, which would be scheduled around 27-28, and thereafter, very soon we have September Fed meeting. Market is expecting either one small hike or maybe a couple of small hike in the current year. So path to least resistance is mild upside, say 45, 46. And for a while, 4,000 seems to be a floor.
Mr. Vakil, you're talking about the levels on a dollar basis, right? 45 to 4,600 is something that we'll be watching out for. Is that a correct assessment?
Yeah, this is basically intermediate relief rally.
Relief rally, okay.
Heavy correction.
Correct. So you are largely expecting that there could be one rate hike that we might happen in this year that will have a bearing on gold too, but largely continuing in this band that we continue to be stuck in as there has been the volatility in the global markets start to recede, or at least they are getting more comfortable with a more uncertain environment, right?
Basically, we are, what I'm sensing is largely commodity sector is witnessing fatigue. A lot of retail wealth destruction seen during first half volatility, be it crude, be it metals, be it bullion, silver. So now market is, I think, in relatively resting mode. And we may see once this festive demand kicks in somewhere around late August or early September, we may see once this Jackson Hole meet is over, we may find a new direction, probably mild upside.
Just one last question, Mr. Vakil, as well. So, you've seen wealth destruction both in gold as well as what you've seen in silver too. What would be your strategy for individual retail investors now?
It is time to be sidelined for a while, and once Jackson Hole is over, we may get clarity on Fed side. Fed is missing inflation target since last 5 years. A central bank like Fed continuously missing its inflation goal looks somewhat strange. So let us wait for Jackson Hole what they give signals.
Well, Mr. Vakil, we'll leave it at that. Thanks so much for joining in, giving us your time today to NDTV Profit. We wish you the best, but let's also just pull up a couple of counters and see what they are doing. Tata Motors PV is the first one. You've seen that stock, under pressure today on the back of what we've seen on earnings too, down almost 4.5% now. And it was a stock that continued to be under pressure from the start. You actually saw some revival actually post the first opening, which was down 5.5%, but a weaker performance from JLR continued to have a bearing in this particular quarter as well. What you've also seen is that the wholesales were down almost 9.5%, and hence that was because of a chassis supplier. JLR has also issued more cautionary tale on China. They've said that the quarter one volumes were down 25%, and they feel that it might get a little more worse first before seeing a revival on this counter. Management also anticipates the same. What's also interesting is that these were comments from Richard Molyneux, who is the CFO of Jaguar and Land Rover. Also, when you look at the new launch pipeline too, you've seen, of course, consistent pressure on this, but JLR's free cash flow position has also worsened significantly in this particular quarter as well. I just want to talk about the new launch pipeline too, because they have launched and expect 4 new model launches in this particular year. That will be on the electric vehicle side, and we'll start it off by Range Rover Electric. That will be starting in September, and then post that they will be following with the other models, especially Jaguar, which will be in early 2027. So this continues to be one impacted stock. Let's also look at Olectra Green Tech. That is the other factor. Let's also pull up the results that came through this morning too. Stock was down 4.8% on the back of results, and it is continuing to be under pressure too. I'll get to Olectra Green Tech in just a bit, because the flash on the bottom of your screen show you the numbers coming in for Ashok Leyland as well. Revenue is up almost 11% in this particular quarter. Net profit though largely continuing to be flat. Now, why is this flat? Would be because of the higher raw material price impact, and hence continuing to see not too much adverse reaction right now, because this was baked into the estimates that we were working with as well. So you do continue to see a similar profile for Tata Motors CV, which came a couple of days ago, where the impact of commodity was higher. Margins were down 110 basis points, but on an overall basis, the street actually cheered the commentary that came through post the con call. Here as well, I suspect that will be a similar picture to play out, because a lot of strong commentary will come through, especially on the electric vehicle portfolio, which is Switch Mobility, and hence that revenue uptick of 11% continues to be important as well. But now let's also look at Technocraft Ventures, which is in focus as the company makes a strong debut today. The company lists at more than 34% in premium over its IPO. My colleague Nimit spoke to Mr. Tyagi, who is the whole-time director and CFO at Technocraft Ventures. Let's listen to what he has to say.
First thing I'd like to ask you, Karthikeya, is where do you think the market weighed you so positively? Was it your order book? Was it your working with the government? Was it the sector that you're in, your EBITDA margins? Where do you think the positivity for your listing and the demand for your stock came from?
Good morning, everyone. Thank you so much. And I would like to wish everyone a very happy Independence Day in advance. And so when you talk about what I think, I would also like to thank all of the investors who have put their faith in our stock and come forward to support us in this time. And so I think what the investors might have seen unique in our particular stock is that first of all, we are completely concentrated in the field of wastewater treatment, and it is the need of the hour. Our water resources are getting depleted day by day. The groundwater levels are going down. The rivers are getting polluted. So our order book of 1,500 crores, that's around, I think, 98%, 99%. That's entirely constituted of wastewater treatment projects. So I think that's one thing that the investors might have looked at. And another thing is that we provide end-to-end composite solutions from the household, building the household connection chamber, laying the pipelines across the entire city, and then taking it to the treatment plant, constructing the treatment plant, engineering it, making the water fit for reuse as the government deems and as per the guidelines of the National Green Tribunal. So I think that those are some of the things that the public might have looked at, and I think I'm very glad that the investors have put faith in us, and we look forward to delivering the results that we promised to do so.
Take that. Let's dive a little bit into that. One of the things, of course, like you said, the key things is your water treatment contracts that you have, which is a large chunk, substantially over 80% of the chunk of your projects is water treatment. Going forward, can we expect the same from you, or is there a plan to diversify that more into your, say, road projects also, that which form a minority part of your revenue model? How do you look at the future growth? Are you going to double down on water, or are you going to diversify into other projects?
I would just like to slightly correct in that sense. So water treatment is freshwater treatment. We are mainly into wastewater treatment. So currently we are focusing on the wastewater treatment projects under Amrut 2.0, Swachh Bharat Mission, and Namami Gange. We also have experiences and capabilities in executing road projects, highway projects, and power and transmission projects as well. So currently, we're focusing on wastewater treatment because the contract value that we can qualify in wastewater treatment is much higher than what we can qualify in road projects and, let's say, power transmission. In wastewater treatment projects, we can qualify for contracts around the value of around 400, 500 crores. So as our ticket size grows, that's what we have been seeing over the years. Our margins have been getting better because there's lesser competition, lesser players who are qualified to bid for the same contracts. So that's what we are focused on. Although if there is a very good opportunity in executing some road project or some power transmission projects to keep our qualifications alive, because how it works is for government projects, if you would like to bid for a contract, there are pre-qualification criteria that you need to have executed similar projects in the last 7 years or 10 years. So if we see an opportunity to bid for projects which keep our margins intact and the execution is similar to what we have executed in the past, we might take up small projects here and there just to keep our qualifications alive, because you never know which sector would be booming in the future. So you would not like to exit any segment completely, but we are focusing on wastewater treatment completely.
I'll take that, and absolutely that was well answered. I'd like to also ask you another question on diversity. Is your fresh issue, right? A lot of it is going to be going to working capital. Of course, I think the market understands you're a cash-intensive business. You require regular cash flow. Since you work primarily with government contracts, there's always a risk of receivables getting stuck. What's your strategy there for an investor? Are you going to look at more fundraisers in the future, or is there a process to ensure that you have that cash flow from the fundraise that you've raised here today?
Sir, that's a very good question. Like, a lot of people have this question about government contracts, that payment from the governments are not received in time. So firstly, I would like to point out that our debtor days are around like 190 to 120 days. And as you can see from our balance sheet, debtors with aging more than 6 months, I think it's only around 2 crores or something above that. So it's a very minuscule amount as compared to our revenue over the years. And also the government, the schemes that we are talking about, Namami Gange, Swachh Bharat Mission, Amrut 2.0, they provide 10% mobilization advance, which is mostly interest free. And so at the beginning of the contract, as soon as the contract begins and signing is done, you can get 2 installments of 5% within 30 days, which is interest free, which covers the lag that you might see in like payments received from the government or the receivables realizing in real time. So that covers us, and it provides us with like some space for execution capabilities. So we're not really concerned with that, because over our past execution track record, we have not faced any bad debt. all of our payments have been realized. So we're pretty confident that we won't face any problems going forward.
Last question to you, Karthikeya, is about the diversification of your geographical market, right? You're, of course, heavily present in Uttar Pradesh and Rajasthan, Uttarakhand also. You've recently expanded into Madhya Pradesh, Bihar and Odisha.
Yes.
How do you see, in a project like yours, relationships and scale, taking that from one state to another state is a complicated challenge. What is your plan to scale the relationships and the business that you've built in Uttar Pradesh and Rajasthan to these other states?
Sir, so if you talk about the political scenario, these are central government schemes under Amrut, Namami Gange and Swachh Bharat Mission. So it's a share pattern with the central government, the state government and the urban local body which is executing it. And we have seen that the political scenario does not really impact us directly, because when we procured projects in Rajasthan in September 2023, the elections were right around the corner in December 2023. And then the BJP came into power in Rajasthan and the schemes were not impacted. As he said, there are central government schemes and the funding and it's essential projects. And if you talk about execution capabilities, we have an in-house engineering team which is responsible for the entire design and engineering of the project. And for execution purposes, our teams mobilize from the teams that are working in Uttar Pradesh, they go to Rajasthan. The teams that are working in Rajasthan, they go to Bihar. It's a cyclical kind of nature. And if we go to a new state where we need to mobilize new resources, we're very much capable of doing the same.
Well, of course, that was Technograph Ventures, a good listing for the company as well. But viewers, you did see some very interesting visual on the right-hand side of our screen today. And that was, yes, you heard it right, the man himself, Tukaram Munde. He is, of course, the Commissioner of Food and Drug Administration in Maharashtra. And he will be speaking to our editors today, and hence we will be putting out that that aspect too. I'll just get a confirmation of what time that will play out for you as well. 6 o'clock today is when you will be watching that live on our screens, and hence all those questions that you might think we will ask him, we will surely will as well. But as we wrap this edition of Lunchtime Trades, important to get some perspective on Skyways Air Services as well, which the company is in focus as it prepares to open its IPO on August 24th. My colleague Parth spoke with the management, Yashpal Sharma, he's the chairman and managing director, and Himanshu Chhabra, the CFO of the company, for the IPO plans and what looks forward in terms of growth. Let's listen in, and thanks so much for watching.
Today we are joined by the management of Skyways Air Services. The company is coming up with its IPO on 24th of August. We are joined by Mr. Yashpal Sharma, Chairman and Managing Director of the company, and also Mr. Himanshu Chhabra, who is the CFO of Skyways Air Services. Well, I had a couple of questions, but my first one is that we are raising around 400 crores of fresh issue in our IPO. So once that is used for, and that will be used for debt repayment and working capital purposes. So what will be the interest cost savings that we'll see after that debt has been repaid in the coming quarters and years as well?
So the overall fresh issue is 390 crores plus, and out of that 216 crores will be used towards the debt reduction, and 130 crores of the funds will be utilized towards the incremental working capital requirements of the company, and the rest of the portion is after the issue cost towards the general corporate purpose.
Okay. And with the debt repayment, after that debt repayment is done, how much interest cost savings can we expect?
So in the short term, yes, there will be an impact on the debt, the interest cost. And as we have seen in the last 3 years, the scale of the operations have been consistently growing. So this incremental working capital also will help us in utilizing this amounts towards the growth of the company and not take any additional working capital debt, which has been the traditional or the past source of primarily working capital financing.
Got it. And also, our revenue saw spectacular growth in FY25, growing at around 74%, but that growth moderated to 25% in FY26. So, what kind of revenue growth can we expect from Skyways in the coming like 3 to 5 years, and how much of that growth will be coming organically versus acquisitions?
So we have consistently grown our volumes over the last few years, and even if we look at the volume growth of the last financial year, it has been very rock solid. The freight rates which determine the revenue moderated a little bit last year. So even with a 7-8% moderation in those freight rates, our revenues have still grown in a pretty decent 25% range. The organization's always motive has been to consistently grow our market share, grow our volumes, and which have always led to a decent increase in our revenues as well. And in times ahead, the strategy of the group will continue to remain the same, to remain very committed towards adding a bigger share from the current customers and also adding new customers in our portfolio, consistently expand our geographical footprint whenever possible, and we will continue to grow our volumes through these business acquisitions. And if there's any time an opportunity which is worth exploring for an acquisition, we will surely explore that as well.
Right. And also, sir, how much of the recent growth and margin improvement has come from that unusually strong freight rates and the Red Sea disruptions because of that? And what happens to our revenue and profitability once that rates normalize in the coming time?
So the business, like I had mentioned, that the freight rates do change from time to time, and there is always a 5 to 10% variation upside and downwards sometimes in the last few years that we've seen. Whenever there are these big market shocks like the Middle East war or the Russia-Ukraine war, etc., there is generally a change that we see in the marginal change in the freight rates, as well as the fuel index goes up and down. So these are all passed through to our customers, and even if you look at our last 3 years or even beyond, the profitability, it has remained very consistently in the range that we have been in, and we are very confident that even going forward we will be able to maintain the same kind of momentum that we have been able to see in the past.
Understood, sir. And also on the margin front, they have increased consistently from 3.75% in FY24 to 3.85 in FY25 and 4.47, a significant jump in FY26. So where do you see these margin levels in the next 3 years, and what is driving this expansion currently, and what will be the factors to watch out for in terms of margins in the coming time?
So the margins profile have been consistently growing, as you rightly mentioned, and our endeavor will always be to serve the customers well, and the margins and the profitability are subset of how well you serve your customers. So we really hope that we are able to serve our customers well, and the profitability impact is always with the kind of services and the kind of solutions you are able to offer to the customers.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे? टाइगर कैसे? Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
First move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets.
Good afternoon, you are watching Small Cap Bazaars on NDTV Profit with me, Somit Sarkar. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade. So let's start with the first management on the show today. We'll be speaking with Fusion Finance. Now Sanjay, the MD and CEO of Fusion Finance, is joining us to give us more idea on what lies ahead for the company. So one of the reason or one of the question that is actually there in the minds of investor is the fact that you have maintained your AUM guidance of 10,000 crore rupees despite the fact that your current AUM was largely flat at close around 7,700 crore. Why this confidence, and what are the factors because of which you are getting this confidence that you will be able to achieve this 10,000 crore AUM?
Absolutely. Yeah, good afternoon to you and your viewers. So I think first the key thing, this is the first quarter where you see the pre-provisioning operating profit kicking in. So far, most of the till Q4, the upside on PAT came from the credit cost coming down. And the actual operating leverage, this is the first quarter that you see coming in. So just to share a number with you, that from a year on year, the pre-provisioning operating profit has improved from 86 crores to 102 crores. That's approximately 18% growth, which essentially says that while book is growing, but the quality of book that is growing is exceptionally higher than ever in the past. Now, coming to your point of AUM growth and where the confidence is coming from, I think first quarter was a test on everything that we had put on the table in the last 1 year in terms of the changes we had done on credit, the changes we had done on guardrails. We had made certain guardrails which were very different from the rest of the industry. And Q1 was also a quarter which was full of external uncertainties. I think while we were watchful, we were also looking at which are the areas where growth should come in. So the way the annual operating plan was divided was that for achieving 10,000 crores of AUM, we roughly need to do about 8,500 crore of disbursement. If you were to divide it sequentially, let's say between H1 and H2, we broadly assume that H1 will be approximately 44-45% of this entire 8,500 crore, which essentially means that roughly about 3,700 crores between quarter one and quarter two. First quarter is about what, 1,800 crores. So we are looking at least 8 to 10% growth from here. The changes which we have done on the new customer, that has led to a higher acquisition on the new customers. You clearly see the new customer acquisition going up in the last 4 quarters from 26% to 37%. It is easier to scale up on the existing customers, and there were certain differentiations, product differentiation for existing customers that we had picked up, but we did not execute them in Q1 because, like I said, there were too many external headwinds and we didn't want to do anything which changes the credit architecture. But I think now we have 6 months of this geopolitical and inflation and all the other things. The book has held very well. First, about 15 days back, we introduced most of these differentiations, and we are already seeing the green shoots in August. So we are fairly confident that for reaching this number, 8,500 crore of disbursement or translating into 10,000 crore of AUM, we need to grow by roughly about 8 to 9% over the previous quarter, and we'll do better than that. So I think the quality of book gives us the confidence that the runway is very clear for the next 3 quarters.
Disbursements will also improve given the fact that it had declined. And I believe it must be because of the reasons that you mentioned. But going forward, disbursement rate will also improve significantly.
Absolutely. And Q1, we all know, is a soft quarter. So if you see, the industry has come down by 20%. But I think the encouraging thing is that our new customers continue to grow. So the new customers on a percentage basis now form about 37%. While I'm talking July, it was close to 42%. And it is much easier to grow on your existing customers, which is where this quarter we see the upside coming from. And we are pretty much on our AOP, like I said, 44-45% coming in H1 on disbursements.
And just wanted to check with you on this front as well. Are the headwinds related to the MFI space behind us completely, or are you still seeing some signs of that?
So I think the good thing that has happened is that last 18 months, we all know that there's a huge deleveraging that's happened in the industry. And because of which let's say what you call, there's a subprime segment in every segment. So the subprime has completely moved out. And the customers which are there in the MFI sector, and I'm not just saying for Fusion, are far superior. They are, let's say, the premium most customers. They have managed headwinds for the last 18 months. And I think all of us are fairly confident that going forward, let's say level 1 shocks will not alter the MFI sector or the MFI current set of borrowers too much.
Okay. And on the margin front, how much further margin expansion could be possible if funding cost comes down for you?
So you already seeing that the incremental cost of borrowing has come down. So it used to be what, about 13% few quarters back. So one, that has come down. There's a small our average cost of borrowing, you still see a little higher by 30 bips. That's because of M2M that we took, which is not actually a actual impact, which you will see away going in the next quarter. There is an impact. So the borrowing cost impact, let's say, will be about 10 to 12 basis point. Second, we had done an interest rate change on yield, of which only 40% impact has crept in the book because, as you know, it happens gradually. So there is another about 10 to 15 bips which will come from there. So I think from a current level of 11.93, there's a margin on NIM expansion expected of at least 20 basis points by end of the year.
And when it comes to the MSME AUM, it has reached to around 800 odd crore rupees. What is the target MSME AUM target that you have for FY27 and FY28? Any targets on the overall mix as well?
Right. So we're looking at 15 to 20% of the book coming from MSME. And I think the way the collection efficiency in the current bucket on MSME is also phased, we are 99.3% upwards, which again creates a clear runway for us that I think the right to win that we have created in the MSME will build on from here. Also, just to reconfirm that MSME is also a ROA accretive product. So our customer yields are about 20 to 21%. And this is also a strong ROA product, with obviously a much lower credit cost. What we are additionally doing is that there's a lot of real estate that we have in MFI. We will be utilizing this real estate for scaling up the MSME businesses. So there are 200 odd branches we have identified in MFI, which do MFI but are based in MSME catchments. We will be we'll be using these branches as spoke to the main hub MSME branches, and there'll be a dedicated MSME resource. We are expecting these 200 branches to add on the disbursement front at least 10 to 15% more from the current level. So about 8 to 10 crore additional disbursements coming from this. We have also launched an individual loan product for MFI borrowers in rural markets, where there will be a credit oversight from the branch credit as well as the MSME credit. So eventually, by let's say end of this quarter, you will have three clear verticals which will be driving growth. The existing JLG, which will grow at a certain pace, but individual loan from the existing set of JLG branches and done through existing employees, but with an additional oversight of credit from both MSME as well as the MFI credit. Just to reiterate, there are 250 branches in MFI which have credit, which are labeled as PQM or portfolio quality managers. So individual loan to MFI borrowers who've been with us for 3 cycles and more, I think we are expecting that book to be about 1,000 crores in the next 1 year. And the third is the MSME on the 90 MSME branches, plus on the 200 real estate of MFI. So these are the three growth engines that will be driving Fusion in the next 1.5 to 2 years.
Individual loan product, how much can it contribute going forward over the say next 1 or 2 years?
Yeah, so we have right now identified it only for customers who have completed third cycle with us, which essentially are 3 to 4 years. The PAR for these customers is 0.2%, while our average PAR is about 1.8, 1.7. So about 2.5 lakh customers we have identified in this. We are quite confident that we will be at least 20-25% of these customers will be able to acquire in the next 1 year, which essentially means about 1,000 crore of book will get added in the next 12 months approximately on the individual loan.
Well, thank you, sir. Thank you for joining us and giving us the way forward for Fusion Finance. Well, that was the management quite confident on achieving its FY27 targets. Moving on to our next management, that's 1.1 Solution. We are joined by Ashok Karnik, the CEO of 1.1 Solution. Sir, congratulations on a good set of numbers firstly. But starting off with your revenue, 2x revenue growth is what you're targeting for FY27. How much of that comes from AI versus human services?
This entire revenue that we have currently put together, which is 2x, is together because of our consolidation from last year, which we put together as what we purchased from our first quarter last year, which was basically Netcom. AI is still trying to really catch up on the grounds over there, and this year we will see a very marginal revenue contribution, but not really significant. But in another 2 to 3 years of time, the AI revenue will start growing up and be a significant number in the overall revenue for us.
Over the longer time period, how are you planning to involve more AI into your business?
Our AI has already started involving across our entire landscape of customers today. And as we speak there, we've been able to contribute in a very significant manner, bringing in value to each of our customers. So they are still picking up. They are trying to bring the contributions coming in. It requires a lot of work from both ends, not just from our ends. But we have moved far ahead. To just give you an example, today we support one of the large airlines in the Indian aviation segment. And we've been able to really offset about 30% of their volumes by manpower against an AI. And as a result, they have rewarded us with more business volume to us. So we have a very strong foothold. We've got about 6 to 7 implemented cases, 12 more cases are under pipeline. LATAM is also seeing a lot of traction on acceptability towards our AI business, and we're moving very strongly across all cohorts.
Okay. Now, when we speak about growth outlook how is the growth looking like for operating margins on the EBITDA margins front? What is the kind of expansion that we can expect from the company's side, say over the next couple of years?
So EBITDA will continue to remain very stable as we continue to multiply our growth at this point of time. However, with AI inducement, we will see about 3 to 5% of growth on our EBITDA margins, which you'll see over the next 2 to 3 years.
Okay. Any idea on the idea or anything that you could share with us when it comes to the guidance front and the growth levers that you're looking for the company, say for the next 3 to 5 years?
So we are looking at acquiring about 1 or 2 companies in the next 3 to 5 years, and our objective is to try and double our revenues, keep our EBITDAs constant, keep our PAT constant, induce AI. The newer companies that we are currently looking at are to be in America and LATAM region. And specifically in this region, we're looking at companies which have got brands which are Fortune 500, and we can leverage our AI to try and bring in much more value to them, see how this can improve their contribution as well as improve our contribution on the margins, and become a very large globally respected company than what we are today.
Right. And you were talking about these acquisitions. Have you shortlisted anything? What are the key parameters that you consider while deciding on these acquisitions?
We are looking at EBITDA accretive companies all throughout. And as I said, that we are looking at Fortune 500 company logos that are being part of this organization. And the work for identifying the right set of companies from here on is underway. And that will continue. So hopefully we should be able to get the right mix, the right opportunity for us to really try and have them join us in this journey of growth for us.
Well, thank you, sir. Thank you for joining us and giving us the way forward for 1.1 solution. Well, that was the management, quite confident on growth and is looking for more acquisitions that could lead the growth for the company going forward. Well, with that, let's slip into a short break and we'll be back with more managements on the small cap segment post that.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
पीओके के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं.
fire?
Buy now. Sell immediately. Hold it, boss. Buy now. Sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back. You're watching Small Cap Buzzers. Well, the next management on the show is Amagi Media Labs. Now, we are speaking with the management to understand more on the Q1 numbers. Sir, firstly, to start off with, when it comes to firstly, to start off with, you delivered a 24% underlying constant currency growth in the first quarter. What gives you the confidence that the 20% growth rate can be sustained, say, over the next 2 to 3 years? What are those factors because of which you're so confident?
So if you look at it fundamentally, given we are in the media technology business and the whole media industry is transforming worldwide. So this is a big tailwind for a company like Amagi as the whole transformation is happening towards streaming and globalization of content that's happening. So truly, if you look at it from a macro standpoint of where the media business is going and what Amagi's solutions and technologies are providing for our customers, we're quite kind of comfortable with the sort of growth rate that we're seeing, and we would see this in the mid to long term as well.
Now, streaming unification grew around 26% on a YOY basis and now is your largest business. How much of a future growth will come from winning new customers versus increasing the wallet share with existing customers in this segment specifically?
Historically and otherwise, if you look at our business, because it's a business-to-business transaction that we do with a lot of TV networks and content creators, if you look at it, you would have seen that NRR, which is the net retention of the company for the trailing 12 months, is 125%, which is a metric which tells you that our existing customers are doing volume growth with us as a company as you move forward. So essentially, if you look at it, this business and the behaviors of this business has always been that a large part of your continued growth comes from existing customers and you are adding new customers on an ongoing basis. So this is the exact trend that we're seeing across modernization, streaming unification, as well as in the marketplace and the monetization pieces. And I think that will continue to go forward as well. So to long story short, I think our existing customers would be a critical part of the growth process as we move forward. And having healthy addition of new customers, which we are quite comfortable in what we're seeing, and some of the wins that we've talked about today are clearly indicators that we are actually not only growing on the existing customer base from an expansion standpoint, but also being able to deliver new customers who would become the foundations for the future growth as well.
Right. Now, when it comes to EBITDA margins, they have expanded sharply in the first quarter, despite the fact that the gross margins were under pressure. How much further operating leverage is available, and what would you consider a sustainable EBITDA margin range, say, over the medium term?
So essentially, if you look at it, I think we talked about it from the day from our IPO standpoint, is this is a high operating leverage business. Because it's a subscription-driven business, essentially what it means is that every year we are adding incremental revenue, and a large part of that revenue is what is actually flowing down to the bottom line. We will continue to see this as the trend line that we goes. If you look at our results and the presentations from investor presentations, you would see that if you look at it, our indirect cost structures are starting to really come down, right? So if you look at our sales and marketing costs as well as R&D cost, they've come down from 24% to 21% in technology and 27% to 23% as part of our sales and marketing example. So you're going to continue to see this trend. So gross margin, I think we're comfortable in the zip code where it is today. And I think we should look at this business as a complete operating efficiency business across direct and indirect costs. And that's the story that I think will continue to play out for the next 3 to 5 years. We're quite comfortable about the leverage that's happening. Having said that, I think it is inching up. You would have seen that we were at 10.5% last year, moved to 11.5% this year on this quarter alone. And you're going to continue to see that inch up as we move forward as well. So we're comfortable. It's going to be some sort of a late teens in the mid to long term. I think is a very reasonable assumption to make.
Right. If you look at the receivable days, that remained around 95 versus your target of 80 to 85. What will drive the improvement going forward, and by when should, and will that also result into a strong EBITDA given the fact that there will be more free cash flow flowing into?
So essentially, if you look at it, again, this is in an annualized basis, if you look at it, right? So our business is fundamentally generating more growth, and the growth tracking down, and we're going to bring the cost, the monies from the growth directly into the bottom line. And that is the directional call that I would like to give you, is that will again convert to eventually to free cash flow. And this year, we've also demonstrated this quarter, we've shown that we've kind of, obviously we have a negative free cash flow, we've halved it already. So directionally, the DSOs increased for us from a collection standpoint. We're seeing that reduction in the DSO, which is helping us today. So all of that, directionally, we are in the right trend lines. Obviously, getting to positive free cash flow means that we should see more growth, and which is exactly the plan of the business as we move forward. So the trend lines, the trajectory, the execution that we're doing, exactly in the direction. There's no surprises per se in terms of how we see this today.
Thank you, sir. Thank you for joining us and giving us the way forward for Amagi Media Labs. Moving on to the next stock, that is Technocraft. The stock's been buzzing. It's a new listing, and a stellar listing is what we have seen. What are the factors that are aiding this? Let's get in Parth.
Right, Somit, a bumper listing for Technocraft Ventures. Issue price was 212 rupees and the stock came in at and listed at 284 rupees, implying a listing gain of around 40% today. Now, coming to a very quick SWOT analysis of the company, they have a strong order book of around 1300 crores, gives a good revenue visibility going ahead, very good return ratios as well, ROE of 26.5, ROCE of 27.7% as well. Coming to the weaknesses, two states, they have really high revenue concentration in UP and Rajasthan, around 88.6% revenues coming in from these states only. Also, their conversion rate is order conversion rate is pretty low at just 29.4% in FY26. Coming to opportunities, the water infra industry is pretty big. Government is spending around 7.6 lakh crores in the period of FY27 to FY31, and also the company has started winning orders. They won the L1 status of 196 crore Delhi Jal Board project as well. Now, lastly, coming to the threats, government is 100% of their revenue, so there will be that delays and receivables risk for them, and also they have a debt of around 76.7 crores, so that finance cost risk still stays in the picture. So that's the quick SWOT analysis of Technocraft Ventures.
Moving on to the next stock that remains in focus, John Cocktail. That stock is one of the top losers among the small cap stocks. At one point of time, it was down as much as 15%. Let's get in Varsha to understand more on what could be the potential reason behind this fall.
Well, it's Q1 numbers basically. So there was a good growth when it comes to revenue, but EBITDA loss is one of the key concerns. The EBITDA loss was actually, or the EBITDA was impacted by project mix and integration costs. Well, management is expecting a stronger H2, though JVG technology and global integration, if you see, remain a key long-term growth drivers for the company. Talking about value-added service mix, because that's where the pain point lies. If you see, the service contribution fell to nearly 1/3 of revenue, and lower project progress reduced service revenue. Well, company says that the service backlog remains strong, and the higher service mix is the key trigger for margin for the company, or for EBITDA for the company. Now, H2 outlook, they are expecting stronger execution when it comes to H2 FY27. Revenue run rate likely to improve meaningful. Additional order wins is expected before year end. Talking about their vision, that is 8,000 crore vision. So they reaffirm 8,000 crore as the long-term growth. that the growth will come from, of course, JVD, Voltron and acquisition. So overall, revenue growth was fine, but it's the margin, or rather EBITDA, which is the pain point, which is led by lower, value added service mix.
Right, thank you Varsha, thank you for that. Well, with that, it's a wrap on this edition of Small Cap Bazaar. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे? कैसे? Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
They say morning shows the day. Markets often have other plans. By midday,
Good afternoon, you're watching the afternoon edition of Ask Profit with me, Somit Sarkar. Now, if you look at the markets, up till the last half an hour, the market was quite dull, but in the last half an hour, we have seen some strong movement on the upside, and right now the markets are largely flat. Earlier, it was trading at least 100 odd points down in trade, and currently, we are struggling around the 24,400 level, which seems to be a resistance, but if it manages to cross that, then 24,500 is something that technical analysts believe is something that we could see on cards. Apart from that, if you look at the sectoral indices in trade today, Nifty Pharma is the top sector loser, down around 0.7 odd percent. And right now on the gaining side, we have the Nifty Private Bank Index, which has also managed to come in the green, which clearly shows that the gains that we are seeing in the market today has been led by the private banking names. Now, on the Nifty, if you look at the stocks that are contributing to the gain, ICICI Bank, HDFC Bank and Bharti Airtel. These are the three major stocks that have been leading Nifty on the green right now. And Nifty Bank also largely flat. It's just down 0.1%, down around 50 odd points, because the private banking names have been pulling the indices higher on the trade. But let's start with the afternoon edition of Ask Profit. We are joined by Ruchit Jain, the technical analyst, research with wealth management, Motilal Oswal Financial Services. Ruchit, coming to you, the very first query is on Aventel. The viewer, Dr. R.B. Reddy from Hyderabad, he's holding around 1,000 shares of Aventel at a price of 185. Should he continue to hold or average this counter?
Do not average, because more or less the trend for the stock is sideways. Major support is around 155 to 152. So keep a stop loss below 150 and hold your existing positions.
Coming to our fundamental guest, Sunny Agarwal, Head of Fundamental Equity Research, SBI Cap Securities. Sunny, the first query coming to you is from Gautam from USA. He's holding 2,500 shares of PFC, bought at a price of 390. Should he continue to hold or sell these shares?
Yeah, good afternoon. I think he can continue to hold, but one has to keep in mind that PFC and REC merger is on anvil, and post-merger, maybe FY28 is the year where we will see a decent up move in terms of growth in terms of loan book and pursuant earnings. So if you have slightly longer term investment horizon, definitely you should continue to hold.
From Bangalore, his query is on Allied Blenders. He's holding 20 shares, bought at a price of 622, currently sitting on a loss. What should he do? Should he continue to hold this counter or exit? Sunny, any view here?
Yeah, would recommend to continue to hold, as the company has been continuously delivering a solid set of earning growth. Although this quarter was slightly muted, but what I feel is that going forward, the growth prospects are pretty robust.
Okay, Jai Shri from Coimbatore is holding 50 shares of KEC International. Should she average or sell? Ruchit, any view here?
The trend for the stock is clearly negative. A clear low top, low bottom structure last 4 or 5 months when the broader markets have done so well. Still, there is no participation on the positive side, and in fact, the pullback moves are clearly getting sold into. So my advice would be to exit from the stock and look for some better opportunities where actual gains can be made going ahead.
Raja from Chennai is saying that he has been allotted 94 shares of Leap India. Should he continue to hold this or exit? Sunny, would you have any view on this counter? It got listed today in trade.
So we do have a neutral view when we came out with an IPO note, as we believe that the valuations are pricing in the growth potential of the business. And anyway, the company continue to be in a very asset-heavy business with an ROE, ROC in the range of 8 to 9%. So I would recommend to exit at a current juncture and maybe wait for a quarter and to track the performance of the company and to re-enter into this Leap India.
Right, the next query is from Jai from Tirupur. He's holding 100 shares of Vari Energies, bought at a price of 3,054. Should he average now, hold or sell? Sunny, any view on this?
Vari, I think you can continue to hold at a current juncture, although we have seen that the entire solar industry is not in momentum or is not getting a very handsome valuation. But the kind of growth plan which the company has unveiled over for the period of next 3 to 5 years, seems the business will gradually get diversified into the other areas of renewable. So if you have long-term view, definitely you should continue to hold and gradually average over the period of next 3 to 6 months.
Next query is on CG Power. Aniruddha wants to know whether should he buy CG Power at the current market price for long term. Sunny, your view on this?
Yeah, can be added. What I believe is that the fair value of the business is closer to 1100, 1150. So keeping that price target in mind can be added in a portfolio.
The next query is from Vishwanath from Kurnool. He is holding 816 shares of Indo Farm Equipments. The query is for you, Ruchit. He wants to know whether should he hold or buy more to average this counter or just exit. Any view here, Ruchit?
Just hold your current positions, but do not average over here. We have seen a bit pullback move recently from the lows, but still volumes are missing on pullbacks. So until we see a good price volume action, do not expect a big trended phase. So for now, I won't advise to do any kind of averaging or adding more to your portfolio. But 130, 135 is the range where no major support for the stock is seen.
The next query is from Lavanya from Ilurus actually. She's holding 200 shares of Bharat Dynamics bought at a price of 1,390. What should she do? Should she continue to hold this counter or sell? Sunny, your view, the company just came out with their numbers. On the face of it, it looked quite strong compared to what the street was anticipating. But what's your view here on Bharat Dynamics?
They come in to continue to hold, although quarter-on-quarter numbers are lumpy because of the changes in execution and the kind of final product delivery. But the kind of focus the government have on the missile front, I believe the Bharat Dynamic is one of a key beneficiary, and I feel the fair value of the business is closer to 1,800 rupees. So keeping that price target in mind, one should continue to hold.
The next query is from Sundar from Madurai. He's holding 200 shares of Shakti Pump at an average price of 720. What's the outlook on this counter? Should he continue to hold or should he exit? Any long-term view on this, Sunny?
So coming to Shakti Pump or Oswal Pump, predominantly solar pump companies, there we have seen that there has been delay from government in terms of rollout of Kusum 2 scheme, which has recently get over in the month of March, and the state government tenders are witnessing a slightly increase in competitive intensity, putting the pressure on margin. So maybe one can exit on rise or wait for the Kusum 2 policy to be revealed to the public. So maybe wait and watch. Let's wait for stock to recover, and then one can switch to some other better stock at a later point.
Okay. The next query is from Vijay from Chennai. He wants to know the short-term target for Cochin Shipyard. Ruchit, your view on Cochin Shipyard?
For now, it has been witnessing some consolidation. The 200 DMA resistance is around 1530, 1540. So that needs to surpass for any kind of trended up move. So 1530 to 1450 is the immediate trading range for the stock. If it manages to surpass that 1530, 1540, then expect levels around 1670 in the short term.
Next query is from Siva from Amravati. He's holding few shares of Z at a price of 159, currently sitting on a big loss. Should he hold or book losses? Ruchit, any view on Z Entertainment?
Hold for a pullback move. Good volumes have been seen at lower levels, and 90 is a good support for the stock. So I would say just keep a stop loss below 90 rupees and wait for a pullback towards 115, 117, where you can take a review account.
Okay, the next query is from Mira Raja. He's holding 1,000 shares of Tata Tech bought at a price of 780. Should he hold or sell? Sunny, any view on this?
Tata Tech, right?
Yeah, Tata Tech.
I think should continue to hold if you are a long-term investor. What I believe is that IT has made a temporary bottom, and there is some positive momentum as far as IT pack is concerned. But if you are a trader, I think one can book profit. If you are a long-term investor, should continue to hold.
Okay, Kavya from Hyderabad wants to know whether is it a good time to buy Viyash Scientific. Ruchit, have you tracked this counter on charts?
Yeah, so broader, there is a high top, high bottom structure on the chart. So overall trend seems positive. 240 to 250 is a good support zone for the stock. So maybe and some more dip towards 240, you can create fresh longs there.
Okay. Satyan here wants to know, he's holding LIC Housing Finance at 570, wants to know whether should he average or exit this counter. Sunny, any view, LIC Housing?
I think one should exit because the company has not been able to deliver any meaningful growth. Despite of trading at less than price to book, the growth is one of a challenge for LIC Housing. What we suggest is that better to shift to other housing companies like Home First or India Shelter, where we are witnessing a 20% plus kind of growth in terms of advances. So better to move out of LIC Housing and shift to better counter.
Sriram Raghuram Raman from Chennai is holding 8 shares of Fredun Pharma at an average price of 927. What's the fundamental view on this, Sunny?
Again, coming to Fredun, I think the company has been doing pretty well in terms of financial performance. So we have seen that profit has doubled over the period of last 2-3 years. So would continue to recommend to continue to hold as the growth potential is still better going ahead.
Right. Let's get in a caller query coming in from Mysore. Mohan, you can go ahead and ask your query.
I just want to know, can I buy Pine Labs for a long-term perspective?
Okay. Sunny, should Mohan buy Pine Labs from long-term perspective?
Again, coming to Pine Lab, what I feel is that the recent likely regulatory change on MDR is likely to augur well for all these payment-related intermediaries like Pine Lab and Paytm. So, would recommend to continue to hold from a long-term perspective and can be added at a current juncture.
Right. Yet again, a caller query coming in from Hyderabad. Vaishnavi, you can go ahead and ask your query.
Yeah, good afternoon, sir.
Good afternoon, Vaishnavi.
Yeah, I'm having Ashok Leyland, the 2000 shares at 170 average.
And you can hold this for long term? Okay.
Yeah,
Sunny, your view on Ashok
short term view on this?
Right. Sunny, your view on Ashok Leyland?
So today the company came out with a number, I think slightly below the street expectation. Hence, we have seen a kind of negative reaction in the trade today. But we believe that again, the long-term prospect continue to remain good. Especially we have seen a very healthy volume growth across both HCV and medium and light commercial vehicle. So we'll recommend to continue to hold. We believe the fair value of the business is closer to 200 to 10 rupees. Keeping that price target in mind, kindly continue to stay remain invested.
Okay, the next caller query is coming in from Vizag. Chaitra, you can go ahead and ask your query. Chaitra? Okay, her query was on, yeah, I think we have connected the line with Chaitra. Chaitra, please ask your question.
Yeah, yes, sir. Good afternoon.
Good afternoon.
I'm having HL, Hindustan Aeronautics, 85 shares at 4,500 average. So what is the short-term target for this?
Okay. Ruchit, any short-term targets for Hindustan Aeronautics?
You can expect levels around 5,400 to 5,500 range, which were the previous swing highs seen in the month of July 2024. So recently the stock has given a good breakout on the weekly and the monthly chart. So hold on your existing portions for those targets.
Okay. The next query is from Gananath Maheshwar. He wants to know whether is it a right time to enter Tata Motors PV. Sunny, any view on Tata Motors passenger vehicle?
Again, the company continued to disappoint on financial performance as we have seen a margin pressure in JLR portfolio. But what I feel is that ultimately the stock is trading closer to its bottom, so risk reward continue to remain favorable. But for stock to move up from the current level, ultimately company need to deliver on number front. So maybe it will be a slightly a patient capital that can invest in Tata Motors PV. We believe among the four-wheeler, relatively Maruti and Hyundai Motors are well placed if somebody want to ride from a short to medium term perspective. Tata Motors PV, if only you have 12 to 18 month investment horizon, and Maruti and Hyundai if you want immediate capital gain over the period of next 3 to 6 months.
Rakesh from Andhra Pradesh is holding 1 lakh shares of PC Jewelers, bought at a price of 9.6 rupees. Should he continue to hold this counter? Ruchit, any views on chart?
Of late, we have seen that the jewelry stocks have witnessed a good up move from the lower levels, but PC Jewelers has rather been more of a range-bound counter. 11 is the resistance for the stock. So until we see a breakout about 11, the stock is expected to trade within the range of 9 rupees on the lower side and 11 rupees on the higher side.
Right. The next query is a caller query coming in from Hyderabad. Sudhakar, you can go ahead and ask your query.
Yeah, good afternoon, sir.
Good afternoon.
I'm Sudhakar from Hyderabad. I have got solar industry shares at 30 numbers at 15,900, sir.
Okay.
What is the resistance level and shall I continue to hold? Because the results looks to be good.
Okay.
Can you kindly clarify, Agrawalji?
Right. Ruchit, any resistance that you're seeing for solar industries, any target that you could suggest here?
The stock is trading around its all-time high levels. So if you put retracement of the previous corrections, then it gives a potential targets around 21,300 to 21,400 going ahead. So you can expect those levels going ahead, and immediate support, that is a 20-day MA for the stock, is now around 18,800. So 800 is the support, whereas 21,400, 300 are quite possible.
The next query is coming in from Venkat from Hyderabad. He wants to know the target for the next 6 months for Divi's Lab and also whether is it a good time to buy right now. Ruchit, any view on Divi's?
Broader trend has been positive. The stock has been a relative outperformer within the pharma space if you see over last 3 or 4 months. But just because of the recent run-up, the momentum readings are in overbought zone now. So such overbought setups get either through some price-wise correction or time-wise corrections. I would advise to keep a buy-and-dip approach Any decline towards 8,000 level would bring the risk-reward ratio favorable. So maybe around between 8,100 to 8,000 if we go long at those levels with stop loss below 7,700 for potential up move towards 8,800 then.
Okay, Kumar has bought few shares of JK Tyre at a price of 595. He wants to know whether should he continue to hold, exit or buy more. Sunny, any view here?
Again, can continue to hold, although we have seen margin pressure for most of the tire companies during this quarter. But again, the price action has been initiated to recoup the margin going ahead. So can continue to hold JK Tyre.
Right. The next query is on Inox Wind. Rajiv from Delhi is holding few shares for the next 6 to 9 months. Any target that you could suggest on this, Ruchit?
Overall trend is negative. Has been a relative underperformer in last few months. Then the stock has continuously forming this low top, low bottom structure. On the higher side, 82, 83 is the immediate resistance for the stock. So I would suggest to keep a sell on rise approach. Any pullback moves, if we get in between, take that as an opportunity to exit.
Right. The next query is coming in from Narayani from Coimbatore. She's a long-term investor and wants to know whether should she buy Grasim Industries or Tube Investments. Sunny, any view on both any of these counters?
One is Grasim and which one is the other one? Tube Investment. Okay, yeah. So again, Grasim have reported a good set of numbers this time, predominantly standalone business. Continue to do well, but at the same time we have seen a massive up move during the last 6 months. So maybe buy on dip is a strategy which one can adopt if somebody want to deploy fresh capital. And if you are holding in a portfolio, kindly continue to hold. Tube Investment, again a proxy play on automobile industry, so that industry continue to do well. Again, would recommend to continue to remain invested in Tube Investment.
Next query is from KCP Rao from Hyderabad. He wants to know whether should he purchase 10,000 shares of Finiotex Chemical, but not for long term. So Ruchit, any view on Finiotex Chemical?
So yes, we have seen decent consolidation in the stock over last few months. So I think going ahead, the stock needs a breakout above 45, 46 rupees. So I would say keep it on a watch list. If it manages to surpass 45 resistance, then create fresh longs above 45 only.
Well, with that, let's start our rapid fire segment. Ruchit and Sunny would kindly request you to keep your answers short so that we can take in as much as queries we want to. Firstly, coming in from Jyoti, Bharti Airtel 120 shares is what she is holding at a price of 960. Should she continue to hold this, Sunny?
Hold, yeah.
The next query is for you, Ruchit. It's on Power Finance Corporation. Subrata Mukherjee from Kolkata wants to know whether it is the right time to buy PFC.
Avoid.
The next query is for you, Sunny. It's from Shankar. It's on Bellrise Industries. Shankar from Bangalore is planning to buy 500 shares of this counter. Should he do that?
I would recommend the company declaring numbers today. So post numbers, maybe you can take call on Monday.
The next query is on Divki Torque and it's for you, Ruchit. Nandgopal from Bangalore wants to know whether should he enter this counter from short to medium term perspective.
Can buy with stop loss below 1200.
Right. The next query is for you, Sunny. It's on Quality Walls. The viewer wants to know whether it is a good time to buy Quality Walls.
If you are a long-term investor, definitely can be added in the portfolio.
Okay. The next query is on Canfin Homes. The viewer wants to know whether should he buy Canfin Homes for long-term. Sunny, your view?
Can be added, but relatively performance is muted as compared to the other housing finance player. We would recommend you to add Home First against the Canfin Home in your portfolio.
Right. The next query is on PG Electroplast and it's for you, Sunny. Akash from Bangalore wants to know whether it's the right level to enter PG Electroplast.
Can be added, although we have seen a muted performance. What we believe is that next 2-3 quarters should be relatively better. So can be added if you are a long-term investor.
Right. The next query is on Cabra Extrusion. It's for you, Ruchit. Ankur from Ghaziabad is holding around 200 shares, bought at a price of 81. Should he book profits or continue to hold?
Book partial profits and continue to hold rest positions for targets around 570.
The next query is on Pidilite Industries. It's for you, Sunny. Mandeep Singh from Jaipur is holding 10 shares, bought at a price of 1500 rupees. He wants a view for the next 3 years. Should he hold?
3 years, one can expect a return of 12 to 13% CAGR from a Pidilite. Keeping that price target in mind, one can continue to hold.
Okay. The next query is on NLC India. It's for you, Ruchit. Gopi Krishna from Bangalore has bought 3,000 shares at a price of 345. Should he hold this counter? Any targets?
Hold at current price, review again on pullback towards 300, 320.
The next query is on Kane's Tech. It's for you, Sunny. E. Venkatraman from Bangalore wants to know whether should he buy this counter at the current level.
Would recommend not to add immediately, as company has been facing a lot of cash flow related issue. So maybe wait and watch for a quarter or two, and then one can take call on Kane's Tech.
The next query is for on Petro and LNG. It's for you, Ruchit. Sriram from Chennai is holding 90 shares, bought at a price of 347. Should he average at the current levels or avoid?
Avoid averaging.
The next query is on Federal Bank. Jyoti is holding 1000 shares, bought at a price of, okay, it's on Fed Bank, not Federal Bank. She's holding 1000 shares, bought at a price of 96 rupees. Should she continue to hold this, Sunny?
Fed Bank Financial, okay. So again, Fed Bank, yes, we have seen a good recovery in the entire microfinance and the such kind of portfolio. So can continue to hold.
Well, that was the last query on the afternoon edition of Ask Profit. Thank you, Ruchit. Thank you, Sunny, for joining us and solving as much as queries we could. Actually, we have managed to solve around 110 queries, including the morning edition and the afternoon edition. And with that, it's a wrap on this edition of Ask Profit. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए। 28, 29, 30।
तंबी कैसे? टाइगर कैसे? Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights.
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. With me is Hiral Dadia. We're coming to you live from the NDTV Profit Suzlon studio, and we continue to celebrate India's 79th Independence Day through the day today, ahead of tomorrow, of course. And everybody's celebrating in the newsroom as well. It seems like a little bit of cheer coming through in the markets as well. Pull up the intraday chart for the Nifty 50. We've come back.
But sustainability is the key, right?
Is the key. It's come off the low point of the day, and I wonder which stocks here are contributing to this. We're still under that 24,400
mark. In fact, let's just pull up Bank Nifty as well and see if it is mirroring a similar kind of a pattern. There you go. Absolutely a similar pattern, 0.2% lower. But let's look at the heat map in terms of Nifty 50.
Yeah.
And then we look at contributors as well post that.
I would think the private sector banks would have come off the low point.
And that's what it seems like, because look at it. You know, your hospital, which is the top gainer, and this is running up after the 2 days after the earnings. So it's interesting to see what's happening to Apollo.
Bharti's really picked up.
Bharti's picked up. Adani Enterprise and Ports, both of them are doing pretty well in trade. Wipro, eternal trend again from the consumption pact, but you still have HDFC Bank, ICICI Bank not giving up complete gains right now, but trading in the positive. But look at what's losing out and what's putting pressure.
Yeah, Tata Motors
PV, and it's the JLR impact coming in there.
But you know what? I would like to pull up the intraday charts for 3 counters, which is one Bharti Airtel and then followed by HDFC Bank and ICICI Bank. Because if anything, I think that this has contributed to a certain extent to the gains. And we look at the contributors chart
in a couple of hours of trade, you've seen that spike which has gone up.
And pull up ICICI Bank and HDFC Bank as well, because I would hazard a guess to say that there you go.
And
so
that's
there's
just
a big
in the last
spike.
15-20 minutes.
There's a big spike. So pull up HDFC Bank as well. There seems to have been a significant buying in these large heavyweight counters.
Look at contributors. Let's just pull up the contributors of Nifty 50, and then we look at the sectoral heat map as well. If you just see what's contributing, look at that. Bharti Airtel 38 points. I mean, I don't think so. I've seen a 38 points kind of a contribution in a while from a Bharti Airtel. HDFC, ICICI Bank very similar, and Apollo Hospitals. SBI on the other hand, so again you're seeing that PSU private bank kind of play, inverse play that's coming in to the fray. Reliance Industries is under pressure, Infosys, Asian Paints as well, but you still have that, you know, individual contribution. Just forget these names as well. Look at the others. That 62 points contribution is something which is actually playing out versus all your top 5 gainers that are contributing.
Yeah, let's take a look at the broader markets as well. Or you might actually see it here, but you'll have to look a little bit.
Small cap 250 is down almost 4/10%.
The mid cap index is, well, 100, mid-cap 100 is down about 0.4%. So the broader markets are not doing as well as the benchmark Nifty 50. The consumer durables index and the media index are up about.
Media is all about Z.
Yeah, it's all about Z. And pharma, you had that positive judgment that came through.
Came in. Brokerage is positive.
From the court. Pharma is down, CPSE is down, Nifty oil and gas. But let's pull up the mid-cap and the small-cap index just to show you whether or not
the intraday charts will be
come
interesting.
off the low point of the day. They're not. Mid-cap index is just about 0.4% lower, so too the small cap index.
Nearly at the day's low.
Pull up the advance decline ratio as well, and you will likely see that the declines are pipping the advances at this point, at least based on what you've seen in the broader markets, and that indeed is the case.
Absolutely. So clearly the breadth is something that we need to now look at. There's a lot of stock specific action in the markets as well, but I think the key factors and the levels is that 24,400, which is broken, and that's the reason why you're not getting that kind of alpha that's coming in. See, you hit a high of 24,400, and that's been that resistance area, and from there you've seen Nifty which has come off the highs as well.
We should speak to Rudramurthy, who's with us. Rudramurthy BV. Rudra, I'll come to you on the charts. And what are you seeing on the benchmark Nifty 50 that may give you a sign of what is to come next week? We've seen the VIX capitulate. It's still below that 12 mark, if I remember correctly, unless it's moved up above 12 in the last 1 or 2 hours. So therefore, are we likely to see more consolidation?
Good afternoon. Thanks so much for having me in the show. See, markets, if you see, especially on the Nifty and Bank Nifty, yesterday we have seen that first outperformance happening on Bank Nifty compared to Nifty, and that has been mostly because of PSU banks. Again, if you see today, yes, there has been some respite shown even from private banks, just now in your discussion which you mentioned. And for me, what is important is, yes, index is consolidating. Now the range is bit broad. On the lower side, if you see, yes, Nifty is taking that support at around 24,200, 250 range. And yes, there is a resistance kicking in at 24,500, 24,600. Or if you go a bit deeper, yes, 23,800 to 24,000 has been a very strong support, and market has held it now for a long time. And again, you are seeing some selling coming at around 24,600. So broadly speaking, this 600 point kind of a range is maintained by Nifty. And if you see Bank Nifty, similarly, it's a 1,500 point range, broadly between 57,000 to 58,500. So for me, I will still remain bullish on market. I will use every dip as a buying opportunity. And most important, this West Asia war effect is not seen now on the screen. So all the Trump mayhem which was happening around and too much of trouble what we were seeing in terms of volatility, that is not happening. And even Brent crude is also definitely below $100 per barrel. FIIs more or less have stopped their huge selling of 4,000 crore plus what you were seeing before. So to conclude, this is a market which I will use to buy every dip. I will remain very, very stock specific and sector specific. And specifically, if you see sectors which I like, Alex, look at the huge outperformance what you are seeing in new age and platform stocks. I've been bullish for this sector for a quite long time. Even now I see value in it. Look at stocks like Paytm, how it has performed. Even see for that matter Nykaa. And I still like stocks like Eternal, and even delivery at current levels look good to me. So you have to be very sector specific and stock specific. One such is new age and platform sector. Metals look good to me at current market price. I see a lot of value in stocks like, let us say, Hindalco. Even for that matter, look at steel. Look at even gold and silver, which has more or less bottomed, and that will help a lot of related companies. Right. So these are some sectors and stocks which I really like.
Okay, so in terms of individual stocks, Rudra, if you have to give top 3 picks, which are the Independence Day picks, which would they be?
So for me, the first stock will be from new age sector, and I pick Eternal at current market price. So buy Eternal at current market price. Look at targets of 360 and even 400 to come on Eternal. And I'll keep a stop loss of 300 for this long call. I expect a big move like Paytm, which has recently happened in Eternal in coming days. So second stock for me is Manappuram. The quarterly results which came was definitely a beat, and because of pre-positioning, stock corrected post the result. Available in F&O, but it is in ban. One can definitely buy it in equity delivery. At current market price, I will be a buyer in Manappuram. Looking at targets of 380 and 400 to come on the stock. 335 can be a stop loss for this call. And another stock, if I have to pick from this entire lot, third one, PNB looks very good to me, and I'm very bullish on PSU banks. So I am picking up PNB. Even SBI for that matter looks good at current market price. Risk reward is very favorable even to buy SBI, but it's a choice. I'm picking up PNB.
So you're making a choice. Okay, you're making a choice, Rudra, with PNB versus SBI right now. Okay, let me get in Vijay Chopra as well. Vijay, good afternoon and welcome to the show. In this kind of a market, which is absolutely in consolidation mode as well, you're seeing a lot of stock-specific action. What would your top bet be at this time?
I think that we have to be very, very picky as far as the market goes. Presently, I don't see any, upside or downside. The markets are going nowhere. The investors are kind of perplexed where to put money in. So I think that defense is one sector. I've been liking defense for a number of years now. Defense, you can look at companies like BEL, BEML, DDL, Mazda, Cochin Shipyard. These are some of the companies which are on my radar. Apart from that, I think that metals have taken a beating in the last 2 days. But again, they are down but not out. I believe that these are good times to pick up good stories like Hindustan Copper looks very good. Midhani looks very good. Hindustan Zinc looks very good. If somebody wants to buy with a medium-term perspective, because, we are in a long-term metal bull run, and any opportunity, any downside is an opportunity to buy. So I think that, copper stocks, zinc stocks, they should do very well. So defense and metals I'm looking at right now.
Defense and metal specific stocks though, Vijay?
Yes, so I mentioned that many stocks, VEL, BDL, BEML, Mazagon Dock, Cochin Shipyard, to name a few in defense. Apart from that, in metals, as I mentioned, Hindustan Copper, Hindustan Zinc, These are good stocks to have. Mishra Dhatu Nigam. So these are good stocks to have in a portfolio with a medium-term perspective. But I do not recommend any intraday.
Of course, no.
Absolutely.
We
The
wouldn't
idea-
expect you to.
Yeah, the idea, Vijay, to ask you the question in terms of your topic was from a longer term perspective and taking into consideration today's Independence Day. So just on that lines. But let's also talk about the stock of the day today, which is Galaxy Surfactants. I mean, that stock is locked in upper circuit. Good set of numbers. Varsha joins us with what has really worked for the counter. Varsha, over to you.
Well, first let's talk about numbers. How were numbers? If I were to talk about the 4 key numbers, revenue was up almost 40% year on year at 1,782 crore. Let's look at EBITDA. EBITDA was up almost, at 249 crore versus 124 crore, almost doubling of EBITDA over here. If I were to talk about margins, margins were at 14% versus 10% last year, huge upside. And net profit was, of course, more than doubled at 166 crore versus 80 crore last year. Now let's see what are the key drivers for this. Volume growth. If you see, overall volume growth was in mid-single digits. Even performance surfactant, if volumes over there grew mid-single digits, the specialty care volumes also grew mid-single digits. So overall, there was a good growth when it comes to volume. Now, India had, there was a strong growth which was seen in India, which returns to double-digit volume growth after nearly 2 years. So this was one of the highlighting points. Growth was driven by tier 1 customer demand, and also the reformulation related volumes made a comeback, which was also one of the reasons why you're seeing a very strong growth when it comes to the domestic market. Now onto the specialty care, which is a higher margin segment for the company, saw mid-single digit volume growth over here. Favorable product mix led to that margin spike that we have seen overall. Key contributor which led to the improvement in the profitability. Talking about margin drivers, product mix is the main reason why you're seeing a good spike in margin. Of course, disciplined pricing strategy has also led to the margin expansion, and the better operating leverage was also one of the reasons. Talking about international business, well, EMET volumes dipped slightly due to West Asia disruptions. It saw high teen sequential growth, signaling recovery. Now, talking about commentary, what management is expecting? Well, demand recovery is visible across market. Strong momentum in specialty care is expected, and India business remains robust for the company. So overall, there was a good volume growth. There was a disciplined pricing that company has seen, and the highlighting point over here is the margin expansion, which was led by product mix, and of course the overall numbers were also great for the company, and hence you're seeing stock is up almost 20% in trade.
Thanks so much for that. The only question though is, Vijay, can you extrapolate that to the rest of FY27? There are no sellers in the stock today, and so even if you want to, you can't get it. But once that circuit opens, and assuming that there is an opportunity down the line, would you say that this is something to consider?
Well, yes, I think that the stock has been in consolidation for about a year, and we haven't seen much. And once the circuit opens, probably, because it's a gap up, we'll see the gap getting filled. Generally, it gets filled. But yes, if somebody gets an opportunity on the downside, so it is definitely a buy. But yes, I don't think that, once the circuit opens, to just jump and buy, no point in that, because the gap has to be filled. And if you get the stock around 2100, 2150, that would be a great level to get into the stock with a medium to long term perspective.
Okay, all right. Let's talk about Z Entertainment. Pull up the intraday chart. It's seen a spike, and this is after the SAT, the Securities Appellate Tribunal, has set aside the SEBI order which barred Z Entertainment and its promoters from accessing the markets. Nimit's joining in to tell you about what this is all about. Nimit, what were the arguments and what was the outcome?
A big breather for Z Entertainment coming from the Securities Appellate Tribunal, as it has provided interim relief to go ahead with its 3,143 crore preferential share warrant issue in the face of SEBI's market ban, which was put on the company for 2 months and on its CEO Puneet Goenka for a year. Now, 2 days ago, the matter was argued in court, where Z made the case that the approval, the shareholder and the board approval for this share warrant issuance came before the issuance of the SEBI order. SEBI said that it does not matter when the approval came, because they're trying to do it in the period of the market ban that's been imposed, then they need to be restricted from doing it. The key question that the Securities Appellate Tribunal asked SEBI here was that if this is in principle not being opposed by SEBI as a transaction, then what is the difference if they do it now as opposed to 2 months from now? Z also made the case that the valuation and timing is critical here, that the value of the shares that are being issued at now may change over the period of 2 months, and investors will be hampered because the money finally goes into the company. The amount that will finally come may reduce, and that risk is something that Z pointed out to the judge. What the judge tended to agree here, and judge has provided interim relief to the company to allow the issuance to go forth. It's also allowed it to access its mutual fund units for dividend payout. Remember, all of this lastly is subject to the fact that Z pays out the penalty on deposit that has to do in any appeal process. So once it does that, then the interim order will not apply to it for this purpose, and it can go ahead with its preferential share warrant.
Thank you, Nimit, for that. In fact, Rudra, let me come to you. If you have to look at the Z Entertainment from April lows, the stock is up nearly, 35-40%. Would you say, with everything that's happening around, probably this is the time to book profits, or are you seeing any momentum on the charts?
Hiral, very clear view on Z. First of all, I will keep a stop loss of 95 and look at targets of around 115 to 118 to come on Z. Yes, even from here, you can see a move of around 10 to 15% from current market price. So I will be a buyer here, keeping a stop loss of 95 and look at targets of 115 to 118. But one thing I am very clear, this stock is not an investment stock. It has disappointed people for a long time. I know Z from where to where it has fallen down, but then one should clearly understand that this is not a stock to own for a portfolio. And remembering Rakesh ji today on a day when he has taught us so much on market and had occasion to meet him one-on-one lot of times, he always says, you should know which is your trading stock and which is your investing stock. Never make an investment decision turn into a trading decision. Also, never make a trading decision turn into an investment decision. So remembering him very clear, this is a trading stock, not an investment stock.
Okay, trading stock, not an investment stock. Moving on, Somani Ceramics, that company has reported a strong first quarter, revenues up 24% and net profit surging more than threefold year-on-year basis. In fact, the margin expansion has remained the key highlight that was helped by higher realizations, better capacity utilization, and a stronger contribution from its bathware business. Abhishek Somani, MD and CEO at Somani Ceramics, joins in. Abhishek, welcome to the show, and always a pleasure to speak to you. Overall, if you have to take cues from what's happening, in the first quarter, or what happened in the first quarter, how are you looking at the remainder of the year? Because the expectation was that on the back of gas unavailability, and the problem that the ceramic companies faced, yes, there was movement that happened from the unorganized sector to the organized space, but any negative aspects which have not really played through in the first quarter that could come in the remainder of the year?
Thank you for having me, first of all. So what has happened in this last 4 months of volatility is that Morbi was shut, which is the cluster in India for ceramics, was shut in the month of April, and pretty much till the 10th of May because of labor shortage and all of that. At that time, we gained a little bit of market share, but since then, Morbi has come back completely alive. So Morbi, all the units are running, which is about 80% of the units are running. And the 15-18% which are not running will probably not run at all, because there is a little bit of a tailwind today for demand with the outage of 1.5 months. The only negative which we faced in the first quarter is that we did not get enough material in April, in May. That stunted our volume growth. Otherwise, normally our volume growth would have been, in this quarter, would have been closer to 6%. So that is the only negative. What has played out in the positive is that we are running our plants at virtually 100% capacity, both our JVs and our existing plant. And also the other positive is that we're able to pass on the entire natural gas pricing into the market. And that's been well accepted.
Interesting. Abhishek, hi, this is Alex joining in as well. And so I'm curious about a couple of things that you've mentioned. Generally, in the space that you operate in, when there are supply chain related issues or issues relating to availability of gas, etc., that has caused a production delay more than anything else, there is a catch up of volumes that takes place. And I'm wondering whether that is likely to take place in the second quarter, and therefore what the volume growth is that you're penciling in. One, two, what is the quantum of pricing that has already gone up?
Right. The pricing went up approximately 16 to 17% for the organized players, and because the unorganized players were that much cheaper from word go, their pricing increase has been close to 35 to maybe 45%. So to that extent, our pricing between the unorganized and the organized has narrowed. So we are that much closer to the unorganized sector. That's number one. Number two, regarding the catch-up which you just mentioned, yes, there is a catch-up which is happening in the domestic sector. The domestic demand is getting more material. Please let's not forget that before the war, Morbi was running at a sub 70% capacity utilization. Now it's to about 80-81% capacity utilization. So that extra material has come up, and more or less all of the catch up has happened for two reasons. A, that extra capacity has started coming into play, and also the other problem which has happened in Morbi, which used to export about 25 to 30% of their produce, with the geopolitical issues and the container rates and the freight rates which have gone through the roof. All of that material is also finding its way into India. So to that extent, the catch-up is quicker.